all out together for you. So if you didn't stay up all night watching, the news, we are going to tell you exactly what's happened. That's all of that is after the break. So stay tuned. We're coming right back.
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had. Okay, this time. Actually, he landed in my office with this whole meat idea.
एक्चुअली इसने बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually a Baniya vegetarian family and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay
Welcome. You're watching India Market Open, and it has been a long night for the Indian Armed Forces as they have defended this country to the hilt. We're all here today and we've slept comfortably in our beds only because of the power that the Armed Forces have shown to thwart an onslaught by Pakistan last night. Now, a lot of misinformation swirling around, a lot of, an avalanche of coverage there, and not all of it is correct. So what we're doing as we start the show today is we're setting the agenda and the record straight on what has actually happened. All of this is a summary of what has happened last night and all factual information. So in case you missed it, this is what's been happening. Pak has resorted to unprovoked shelling in Jammu, Kupwara, Akhnur, Punjab, around the border with India last evening. This was thwarted. The army has intercepted and destroyed all projectile and drones in over 15 cities. As a result, there was blackout in several cities as well, as is the protocol. What we are learning is that India has begun naval ops in multiple Pak cities as well after this, but we will wait for official briefings on this. There's heightened security and restrictions at all airports. In fact, airlines have asked passengers to come in earlier, because there will be a second layer of security checks going forward. The other point which is important, and we will also dwell on, is that India will be making a case today at the IMF to stop aid to Pakistan. There's an important meeting today, and we'll get you more details on that. So that's with what has been happening last evening, and of course it's going to have an impact on everything, including markets, which is why you're seeing the implied open down about 300 points today. But to get perspective on this, on everything that's happening from every angle, I'm joined this morning by Samir Arora. Samir, I'm glad you've given us time today, and thank you so much for speaking with us here at NDTV Profit. As you know, we're hoping to steer our viewers toward what the right decisions would be to make today as well. Suffice to say that there will be panic at opening after all of the events last night.
There would be, but I think we don't have to participate in it, because first of all, you have to imagine not for today, but for 5 days, 10 days later, there might be a very low probability that this really escalates to a, force to force or a army to army kind of this thing. Right now, it is still remote targeting, and they're using, both the sides are using drones. And India anyway keeps emphasizing that we are only reacting now to what you have done or will do. Otherwise, we don't want to prolong it. So at some point, I mean, the Pakistani guys have to decide, but in general, my feeling still would be that they are now still trying to get a way out of this. And in any case, today the market is down 1.5%, and then let's say it goes down another 2% on Monday or Tuesday, and then it ends. On the third day, you will get such a vicious rally that everything will come back. I have seen it all my life, because I have seen many, in 30 years, many things. Cannot react today. Today, just see the news and hope that it ends quickly or it ends after 2 days. But obviously, there's always that tail risk. Okay, it might become a serious war that might have a low probability, a high impact, but you really can't live your life in terms of markets or even otherwise worrying about a low probability, but otherwise maybe high impact event.
Samir, hi, morning. Alex here. So from that perspective, then obviously the mutual fund investor continues their regular investments, and I think those that did over the course of the last couple of months and during the period of selling for the markets have been rewarded, because you had a very sharp bounce back already.
So the big picture backdrop is that the FIIs are going to be coming in. We have seen even yesterday they came in, but why are they coming in? We have to understand. So the big picture backdrop is that the world find itself over invested in US. Now, even if US does well, even if US does all these trade deals, which look very highly unlikely that they'll happen smoothly according to me, but even if it does, the world has accepted or realized that there is too much investment that they have in the US market. So just to give you some numbers, basically, the MSCI index will have something like near 70% in US, and otherwise a longer term average, say 20, 30 years, will be like 55, 60%. So there is some 10%, 15% that people have invested over the last, since the global financial crisis. And some estimates I saw from some of these big bond guys in US is that 15, 20 trillion dollars is the exposure, which is higher than, say, a longer term average, what it should have been. And some of it wants to leave. Even in today, there's a story, top news in Bloomberg, that Asian families are selling US. So what I'm trying to say is, if there is that marginal shift from US to non-US, and then the non-US companies, therefore countries get that, then India is a massive, significant potential recipient of these flows. And over the last 2 years, the domestic guys were buying and the foreigners were selling. You want a scenario where both want to buy or both are willing to buy. And that is the scenario which we could find ourselves in post this event now. And this event, unless you are betting on a low probability, I don't know how much probability, but very low probability according to me, you will get it plus minus a few days.
Samir, so therefore, a lot of people talking about valuations as they stand right now, not too expensive and not too cheap, considering the kind of the run-up that we saw over the last couple of months. If FIIs are buying, traditionally they've gravitated to a couple of pockets. Does that remain the case, or do they venture further?
So we can't have a very big rally, like a 30% type rally, even if both want to buy, because then the valuation and the results have not been good also. So what we mean by don't sell now is that you could easily in the first year, depends, maybe 15% here or there, and then you have to grow into that with earnings. But right now, I would think, and I thought uh, uh, that financials are the ones which foreign investors sold the most, but otherwise own the most, and therefore they are most comfortable with that. It other than if something happens to the economy, that's what I'm saying. This we have to assume is a low uh, time period, low probability that it goes into serious mode. Then the financials are the best because they are the largest companies, and foreign investors already have them, and they sold a lot during the last 2 3 years. And even prima facie level, it looks that they have not done as well, or not re-rated in the last 3 4 years, unlike the Indian consumer guys and small cap guys. So it'll be easiest for them to just buy their current favorites or their old favorites.
Right, Samir, good morning. Hiral this side. So clearly, coming back to the first answer that you gave with regards to where FIs were concerned, their flows usually in the past have been unperturbed as well during these kind of crises. And taking that scenario into consideration, if you have to take the lessons from India's past conflicts, the clear message has been history showing you short-term conflicts yield long-term stability and avoid panic selling. That's usually the way markets have performed. In that kind of a scenario, from here on, one advice, yes, do not panic sell. But from what Alex said as well, where do you see pockets of opportunities that come in right now? And two, how much should you be sitting in terms of dry powder?
I don't think there is need to generate new powder. That's the first thing. Whatever you have, you may have delayed by 2 days here or there. It's just psychological because, as a fund manager, if I have 5% cash and the market falls 2% and I fall 1.9, I'll be very happy. Oh, today I outperformed the market kind of thing. But a regular investor doesn't care. And you have to see beyond, few weeks at least. And my thing is that if the backdrop of foreign flows is there, and we are also considered beneficiaries of this trade war. And, one day we will have this deal in the next 3 4 weeks, and we will have a clear advantage. We already in the India-UK deal have some advantage now over China in terms of even some few items being exported to UK, or we are on par with Bangladesh on textile or something or the other. And broadly, we are on the right side of US trade relationship, then we are considered beneficiary, and we were getting and had started getting these flows. Now, in terms of what to buy, as I said, we like financials first. We think that IT, if some foreign investor is leaving effectively US to come to rest of the world, why does he want to buy something where the client is again a US client when he can buy, if he wanted, the original IT companies of US, which have actually done much better than Indian IT companies, even in the most recent quarter. So therefore, I would think that the first point of stop will be financials, and then some stocks here and there, and one day some consumer variants, and also some IT, then they will buy if they are really coming back. But the thing is now, if both main story is that if both FII and domestic guys want to buy someday soon, after this is over, the India Pact issue, then everything can do well. The Indian guys will buy more mid and small, the foreigners will buy large cap. But big picture, because we've just seen a correction driven primarily by valuations, we have to be now at least a bit sensitive that what happened in November, December, you would reach those valuations if the market went up in a short period of time, say 10-15%. Therefore, I say for now, that will be a pause. Unless people have new estimates for the next few years based on new things that happen between now and then.
Samir, I'm just wondering, as investors watching this, what would be the thought process today? Would it be, let's stay on the sidelines and see how things pan out? Because we don't know what the situation is going to be starting later tonight. A lot of the military action typically will happen later tonight, and then you're going into a weekend. Would it also be take this opportunity, because we know what the outcome of this is going to be and how the deck is stacked. There's an important IMF meeting today as well. This is there is no confusion about what the outcome of this conflict is eventually going to be.
Correct.
Yeah.
Correct.
So, should the brave heart say today, if I get an opportunity, let me go out and buy, or should you stay on the sidelines because you do have 2 days ahead?
So what we say is that what you do depends on what you have done. Okay. So for example, in my long short fund, I may say, okay, I'll cover some short sometime during the day, which means I'm buying. In my long only fund, I mean, most of those funds are actually in a mutual fund. So those guys know. But if some fund has more cash, they might use it. If they don't have, they might say, anyway, we have only 3% cash, let it be. So that's what I'm saying. If somebody has 10% cash, he should spend 2%. In my case, because I run a long short fund, depending on what happens to the stocks, I am short. I may cover saying, okay, enough for this event and around this event. So it depends on what you have. But if you have only a little bit of cash, just for psychological comfort, even if you don't invest it, it is not going to change your life either way.
Samir, I'm just wondering about, and we'll get some information about the flows today in the month of April. There's quite a bit that's changed since that point. I'm just wondering, and you're probably aware of the trend, so you probably be able to give us a sense. Has it been robust? Because I would think that markets have performed well.
Well, we are very small, but we keep getting, and we have not had, but we are very small in the mutual fund space in terms of the flows. And also because we had a new fund, so our growth in terms of the flows will be a little higher. And, generally so far it's been 300%, as in the last year assets grew of the industry 25%, our assets grew 3x. 3x. So, 200% growth. So the point is, but we are too small, so we are not a good reflection of what may be happening. But mostly I would think it is okay, because I have not heard from my marketing guys in India that, we have done something wonderful and the rest of the world is having outflows. I think they're just part of the same trend.
Samir, how are you looking at the US-China trade tariff? If that comes through and the rate is lower, what happens in terms of India? How challenging will it be for India?
So right now the assumption is that it'll be 40-50%. Actually, in his election campaign, Trump said, I'll put 60% on China. Actually, in today, there's a story that if these meetings go well, which will be just exploratory meetings, he might straight away reduce it to the 50-60% type number. So 50-60% is good enough. I don't think 145 is a sustainable number. Anybody thought, and if anybody is investing in India, that there will be a 135% difference, because India will also get 10%, just like UK has got. I think everybody will get 10. Some sectors will get more, and China will get 40-50. But because time has been spent in reaching this quarter will be bad, next quarter will be bad, and therefore I am actually, plus now I feel that the Mag 7 stocks, every one of them has some issue, maybe other than Microsoft. And therefore, I am not at all bullish on US right now.
Okay. So, would you say the devil in the pack is China at all, or do you think that you're writing that off as well? Because if money is flowing out of the US and you're saying that India is a contender, would the devil in the pack be, or the joker in the pack be China? Is the question I have.
Joker in the sense that whether it also gets flows.
Yes.
It should get. Even I'm willing to put. Even with that 50% tariff, because they have their technology and also their valuations are very low. It is just, I think China, everybody should. In China, but they are not substitutes. Please understand, that's the whole story. Like we have a global fund in which we used to have, now it is 8-10%. We used to have 70% in US, and we sold maybe 62% of that. Now that 62% cannot easily say, okay, now put all of that in China. So even for the world, because in a global fund, everybody plus minus, maybe we are a bit more aggressive. But if you have 70% in US and if you sell 5%, you can move it to China. If you sell 30%, nobody in the world is going to move that much to China. So therefore, in the end, you will still have to either after a few months go back to US or change the stocks, or do some macro non-US, ETF or something. But it is not easy to just say this or that, because the sizes are very, very different in the portfolios of the world. And we are not competing with China, I think, in the sense, this bet is non-US. That people don't want to increase their weightage in US, either in the currency or in the market. Because even after a deal is done, what if one day later Trump decides that China did not do this on fentanyl or do that, and then he says, okay, sorry, I'm reimposing. Now people are not comfortable with totally relying on that as a way of doing investing.
Just as we round up the conversation, Samir, now there are two factors. One is, of course, how everyone right now in India, Indians are feeling about what's happened last night and the escalation and the tensions. And the other is how the markets are going to behave. How much of an impact at the end of the day in terms of market movement is going to rest on the regional conflict?
Means market is today going to depend only on this conflict. What else? Today there is no tariff beneficiary and all. All I'm saying is, you have no more information than I have. You all have the same information. That is not enough information to think that this is going out of control so much that it assumes the tail end risk scenario. If all 2-3 days, on the fourth day you will get, if it is a small fall of 2-3%, you will get it in opening on one day, whichever day that be after X number of days. Of course, there is always that probability in life that you go out for a walk and think you are doing it to reduce sugar and you get hit by a car. But I'm saying you don't lead your life that way normally, right? You are leading it normally that you are playing stats. And the statistics, or not statistics, but general probability would be that it still seems a bit controlled.
Probability. You said it. Samir, thanks so much for joining us this morning. Pleasure as always.
Thank you very much.
All right, let's very quickly take you through what happened in trade yesterday for what it's worth, because there's a whole set of new information that's going to have a bearing on trade. Foreign institutions buying yet again 2,000 crore or thereabouts, and some of that is what Samir was just speaking about, the deployment outside of the US and into other markets. Foreign institutions, in fact, net buying for the 16th straight session, and in that time they've bought close to 50,000 crore rupees of Indian equity on a net basis, and that's quite considerable, quite significant. Indian equities, of course, ended lower in a choppy session amidst that geopolitical tension, which you're well aware of at this stage. The India VIX spiked very dramatically towards the end of the session, as much as 10%, and it hit 21. Remember that a VIX above 20 indicates heightened volatility, and there you go, the intraday VIX, you see that spike towards the end of the session because of developments that came through. In fact, that's the reason why the Nifty 50 also fell to a low of 24,150 just before close, before recovery. And remember that the closing price is a reflection of the trade in the last half an hour, which is why the close above that point is what you can see at the end of that graph, and we closed at 24,273. Bear in mind that 37 stocks out of the Nifty 50 declined in trade yesterday. We ended with cuts of about 0.6%, but the broader markets lost more, 1.8% for the mid-cap index, 1.2% for the small-cap index. IT remained the sole index, major index in the green, with gains of about 0.2% or thereabouts. Realty, metal were the worst performers, but you also had sectors like auto, pharma that underperformed in trade yesterday.
And the last hour of trade was extremely important because the kind of cuts that we saw the moment the statements kept coming in and the kind of accumulation that was happening at 24,400 in spite of me breaking that 24,300 mark. So interesting move from there. But if you have to look at today's session as well, volatility is key right now. If you see the wicks, we will keep our eyes on that. The bulls are losing grip below that 24,500. There is panic selling. That's what is happening in the markets, and this is what you could be watching out for. Now, taking the weekly expiry into consideration, there has been heightened uncertainty as well. There is a cautiously defensive tone in the market, and that is what the options data is indicating so far. Profit booking at higher levels is the trend, and the call writers are building hefty positions at higher strikes, and the put writers are being subdued at upper levels. So what is telling you that the bulls are hesitant right now to chase the rally. If you talk about yesterday, the weakness below yesterday's low, which is 24,150, that can lead to an extension of decline towards levels of 24,000 in trade today. But overall, 24,000 to 24,600 is that broad range where Nifty could consolidate. And there is strong support between 24,000 and 23,800 on the downside. In terms of resistance, 24,550 to 24,600 is what you should be watching out for. If you're able to break above that, which does not seem to be the scenario, taking the implied open into consideration, it could lead to an upward move. But volatility will remain elevated. The last hour sell-off that we saw in terms of yesterday's session, that actually dented the sentiment in terms of Bank Nifty as well, which was actually built up over the last 2 trading sessions. And now you're seeing profit booking that's coming in around levels of around 55,000. You can expect Bank Nifty to extend the consolidation that it has been witnessing over the last 8 to 10 trading sessions, and that range for Bank Nifty is seen between 53,000 and 56,000. So what's interesting is initially the consolidation range for Bank Nifty was around 2,000 points. Now it's expanded to around 3,000 points. And the key support is seen between 53,000 to 53,500. But clearly, to be noted that these levels will not hold water probably on days like these. So there is a possibility that you could break support levels as well, and there's no looking back.
Yeah. What I think will be crucial is if we have a briefing in the first half of the day, and we're awaiting details to confirm that on, whether there is an official briefing, likely that there will be one during market hours where clarity will come in on what exactly has happened yesterday, what is the extent of retaliation that India has, put forth, and what the next steps are. Any kind of statements, so in terms of factors to watch, any kind of statements providing an off-ramp, if you listen very closely to what officials from the Ministry of External Affairs have been saying, even on international channels, what Indian Ministry of External Affairs officials have been saying, and over here as well, is that India has provided an off-ramp to Pakistan. We're very clear, you stop attacking our military establishments and civilians and we can start de-escalating. So if there is any movement in that direction, that's when the surge comes back. Meanwhile, market will await stability amidst these geopolitical tensions. Yesterday's decline was compounded by the weekly derivatives expiry, triggering a broad-based profit booking, and which is why the Nifty breached the 24,200 level intraday. Momentum indicators are showing continued weakness. If 24,200 is decisively broken, Nifty may test 24,000 to 23,850 zones. On the higher side, 24,400 to 24,450 remains a critical resistance zone. For the Bank Nifty, support levels are at 54,154, 53,958 and 53,641. Resistance is at 54,787, 54,983 and 55,300. So those are some of the factors that you have to look at today. Also look at defense stocks. If there's any statements coming in, what happens after this kind of escalation of conflict is whatever defense budgets were penciled in will definitely be increased and bumped up. Clearly, forward thinking of the Indian government has helped, like we've seen with the S-400 defense systems that we procured from Russia. Rafales have been pressed into service. So watch out for defense stocks this morning. And of course, there is a lot of news on companies. We'll not go into a lot of detail this morning because we're also focusing on the military aspects of what has happened last night. But we'll quickly start off with the watch list. So on our watch list today, and in terms of the news flow with stocks, L&T first up, profits have beaten estimates, strong FY26 commentary. Titan has seen hedging gains lead margins higher. Britannia has seen EBITDA beat on lower employee costs, so that's in our thumbs up category as well. As far as Z is concerned, lower cost and taxes have aided profits. So this is all results impact that we're talking about. Union Bank of India has seen strong PAT growth. Return ratios have expanded as well.
Right. Moving on, you have Brigade Enterprises also, that is a thumbs up. They're looking to develop a 2,000 crore project. Apart from that, you have a Kalyan Jewellers, a robust same-store sales growth is what they've reported, but what's going to be interesting is how it pans out in the first quarter in terms of commentary. Biocon as well, you have the EBITDA and the margins that have beat street estimates, so that's a thumbs up on Biocon. And another pharma stock that is in focus is a Lupin, where they've got approval for a new drug.
All right, and you have on the losing side, REC, where it's not the best set of numbers in the fourth quarter. Growth guidance has also missed the expectations of the street. Pidilite is another weak quarter. The EBITDA miss was on account of higher marketing spends by the company. Muthoot Microfinance, and this company has seen its credit costs rise. Asset quality continues to be a problem. And Fine Organics, lastly on the list, you have a weak operating performance that has been reported, and so watch out for this stock on the downside.
Okay, joining us now on the program is retired General S.L. Narasimhan. To put into perspective what we've seen last night, General Narasimhan, thank you so much for your time with us here on NDTV Profit. As you know, we set our viewers up to just put into context the extent of escalation that we have seen last night and how you would encapsulate it. Is this the right way to put it, that Pakistan attempted to attack India on the border and was foiled?
Firstly, thank you for having me on your show. I would like to see it in this manner. It is a action-reaction kind of a scenario that you're looking at. The action was started by Pakistan on 22nd of April. The reaction is what you saw from our side. An action, but it is a reaction to what happened in Pahalgam. That is the Operation Sindoor. And thereafter, you saw what happened last night, the way Pakistan retaliated or tried to retaliate. The action-reaction will continue. What we have said, we have targeted terrorist camps, only terrorist camps and not any military establishments or any civilian establishments. But unfortunately, Pakistan does not have targets as terrorist camps in Indian territory. So he has to do something to do, and that is why he attacked the military installations he tried to attack. Unfortunately for him, our integrated air defense network was able to neutralize all the attempts of Pakistan so far, and no casualties have been reported due to that particular issue. However, you also found the ceasefire violations taking place for the 15th day continuously today across the line of actual control in Jammu and Kashmir. And after Operation Sindoor, artillery fire also started from the Pakistani side, and that has created Indian civilian casualties. So this is the situation in which you find yourself in. India has conveyed 3 messages. First message to Pakistan: if you support terrorism and terrorists, you will get paid back in some way. The second thing to the terrorists, that if you inflict pain, you will get more pain than what you inflict. Third, to the international community, that India stands steadfast in fighting terrorism. I think this is the state in which we are in at this point in time. We have also intimated that we are not for escalation. If Pakistan escalates, we will escalate correspondingly. So that is the situation in which we find ourselves in at this point in time. And hereafter, we'll have to wait and see as to how this progresses further.
So it's well put, General Narasimhan. In this action-reaction, has enough of a reaction now been given by India to act as a deterrent to any further escalation? And does Pakistan now have the capability to escalate further? A lot of lay people want to understand how far this can go.
I get the anxiety of the people who are wanting to listen to this. Please understand this. If you look at any kind of conflict in that is happening, the side that will have a larger capacity for war sustenance will win the war. In this case, Pakistan does not have the war sustenance capability. A few days ago, you found that the reports came out that they can sustain war only for about 4 days. And you will find that so far what has happened is just at the tip of the thing. We have not used any ground forces. You have not used any armor. You have not used anything, any major formations. So you have just actually scraped the tip of the iceberg by launching certain drones and missiles. So if should push come to shove, India definitely will be having the capacity to outmaneuver and outlast Pakistan in any kind of war that will take place. That is point number 1. Point number 2, how far it can go now is something that depends on Pakistan. So if Pakistan wants to escalate, it will further escalate. Otherwise, it may not. What can Pakistan do to escalate? You can see that drones were used, some missiles can be used, Air Force can be used from standoff distances, artillery fire can continue, certain terrorist activities can continue in case they are already infiltrated somewhere and are residing within the country. These are the kind of action that you will get to see. The closure of the airports, the blackouts, etc., are defensive measure, basically to ensure that population does not get affected. That will continue till the time this conflict reduces in intensity and then peters off. So this is the way I think you need to see it. I don't see a very major escalation to a full-scale war happening, but we should be prepared for it.
Thanks so much for that very clear explanation of the way that things stand right now and the possibility of what could occur going forward. Just a clarification to that, ballistic missiles have not been used, and I'm just wondering, as a layperson, as a civilian, when such weaponry is used, long-range weaponry, can you put into context for us the capability of the Indian anti-missile system, and how would India respond in a situation where ballistic missile technology is used?
You see, it is like this. There is no single system that does air defense. Air defense of a country is the responsibility of the Indian Air Force. But you need to understand that there is an integrated air defense grid that has been established. It will have, in layers, many weapon systems that will be deployed. Like, for example, at the forward edge, you will have the handheld ground-to-air missiles, manpairs as you call it, that will get deployed. Beyond that, some increased range weapons like Akash missiles, etc., will get deployed. And beyond that, you will find the S-400 variety of weapons that will get deployed, which has got a range of 400 kilometers, which can cover the entire Pakistan's depth. So it is a layered kind of air defense. It is a grid patterned air defense which will cover the entire area. And there is a system by which the Air Force monitors this. It's a electronic and AI-induced system, and that is very effective. And that is the reason you find none of the drones, none of the missiles that was launched by the Pakistanis have come into play. So this is the way that you need to understand the air defense. In addition to that, you will have the Air Force, which is already deployed. That will take off in case further, if they locate any of the Pakistan Air Force coming into play. So this is the graded system. It's a grid system, which will actually cover the entire area and the region. I'm simply put, I've not gone into the technical details. I've just given you a general gist of how it is done.
This is a very important point that you make, General Narasimhan, but from a civilian perspective, anything that you could advise in terms of how civilians should be reacting as well in times of uncertainties from here on when you're hearing any of the siren drills et al. Because clearly, the way we are looking at this is, this will end only when each side could probably claim a win, and generally we see a de-escalation that happens. And taking that this is a new warfare, it's going to be tough for the Pakistan army also to handle, as you're mentioning. How many hours from here are going to be crucial according to you?
I think the next 48 hours are going to be crucial. That is point number one. Point number two is, I don't think anybody, at least India, is not looking for a win here. We have conveyed what we needed to convey. We have told them we will not escalate unless you escalate. So I think the level, the playing ground has been set. So it is actually depending on the Pakistan authorities to decide how they want to take it up. So that is the way we need to see it. As far as the civilians' reaction is concerned, please understand the drills that we did on the 7th of May. It was with a purpose. When we launched this kind of an operation, we knew that a reaction will come from Pakistan. And that is the reason the drills were conducted in 244 districts, which could be affected by any activity of the Pakistan, any activity that Pakistan could take. So that time, the drills were explained to you. In case of a siren, find a place which is safer, which is closer to you, and move there. You need to also be prepared to help your fellow citizens. Don't only look for help, please also try to help the fellow citizens in reaching the safe places. In terms of health and other issues, we need to be prepared to help people to get to the hospitals in case they are injured. There are a number of things like this could be done. Blackouts that happen, any light that comes out gives a target for Pakistan to engage that particular place. That is the reason for the blackouts to be fully effective. So many issues have been sorted out on the 7th. Whatever the civilian authorities have told you to do, I think if you follow that, we'll be in a better position.
Yeah, thank you for explaining all of this so clearly, General S.L. Narasimhan there. Joined now by Shiv Arur, our colleague who's live from Srinagar. Shiv, I think everyone has been seeing your late night and all night vigil on exactly what has been happening. And for viewers who are right now wondering where a credible source of information is, it's coming from Shiv Arur. So thank you so much for joining us this morning on NDTV Profit. Just trying to understand what is the latest information we're getting. Would we be hearing officially from MEA and armed forces today? Because people are just trying to wonder what happens next after what we've seen last night.
Tamanna, good morning, and to all of your viewers, and thank you for those kind words. We do our best here at the NDTV network because we obviously subject all information to a far greater degree of scrutiny than others, and therefore only authentic reporting here. Now, as far as official information goes, I'm actually happy to report that there is a greater degree of information flow now from the government officially. Yesterday there was a Ministry of Defence statement, remember, about Operation Sindoor 2.0, where they talked about, the attempted attack on 15 different cities, including Srinagar, where I'm reporting from this morning. They also talked about the drone strikes on Lahore. Early this morning, the Indian Army, has gone many steps ahead. Not only have they reported, Tamanna, about the line of control being activated literally across every single sector. Heavy artillery shelling has happened overnight in many of those sectors, but they've actually also released a video of the Indian Army destroying a Pakistan Army post using what appears to be, some kind of a guided weapon, an anti-tank guided missile probably. Very dramatic few seconds of, thermal imaging weapon footage that's been released for the first time by the Army. So this is actually a bit of a milestone because during Operation Sindoor itself, during that first press conference that was held by the Foreign Secretary and the two lady officers, they did release, some combat footage, sensor footage of the destruction of the terrorist camps in Pakistan and POK. But the footage released this morning, which is only a few seconds long, is the first imagery of the Indian Army destroying a Pakistan military, building or post. And that's going to have its own implications because, as you know, Tamanna, so far the Indian government and the Indian military has stressed that India's actions have been non-escalatory. They've been restrained. They are very much in the domain of what Pakistan has been trying to do. Pakistan has been firing missiles and attack drones at Indian military establishments, even though India had only attacked, terrorist targets within Pakistan. And that is being seen as an act of war. Even then, India is being as restrained, and calm as possible and only conducting things under that threshold of what Pakistan is doing right now. Could things escalate beyond what is happening now? Most certainly. It's a warlike situation. Let's not, for a moment think that things cannot escalate. But I think there may be a window of opportunity as far as de-escalation is concerned, because in every single statement so far that's come out from the Indian government, if you notice that last paragraph talks about how if the Pakistan Army signals a de-escalation, then the Indian Army will do the same.
A very important statement that you're making, Shiva, that is echoed by former military officers that we're speaking to as well. I'm also wondering about the situation on the ground, Shiv, because there has been shelling and there have been breaches of the ceasefire. So what is the reaction of the Indian administration? How are they ensuring that people are kept safe?
Yesterday there was an important meeting by the Home Ministry where evacuation from the frontier villages, I'm in Kashmir right now, so the two big Kashmir sectors of the line of control are basically Uri, Baramulla and Kupwara in North Kashmir. I've spent the last 11 days at both of these sectors in those forward areas, and I got to be honest with you, it's not looking good as far as those villages are concerned, because Pakistan is deliberately targeting civilian settlements and villages. I visited village after village in both these sectors that have been shelled. They're like ghost towns right now because people have left. Evacuation itself is a complicated issue because many villagers who've lived there for generations don't see any sense in leaving. Some of them have built their own bunkers. Many of them disappear for a while to relatives' houses. This is of course not to blame them. They have the most difficult life living there in the line of fire. But I think with this situation escalating, both the local administration here in Kashmir, of course in those forward areas, in conjunction with the state government and the Home Ministry, will be, as we speak, as I bring you this broadcast, trying to move as many of people back as possible, because, like it has been officially said, at least 17 civilian casualties have been inflicted as a result of directed fire by the Pakistan Army using artillery on Indian villages. And this is no mistake. This is no misfiring. These are sophisticated weapons, with very little error margin. So Pakistan knows what it's doing when it's targeting Indian villages on the front line. And these are old villages. These are not new settlements. These are villages that have been there, for literally for centuries together. So therefore, I think there's something needs to be said about how India is attacking terrorists. India has now begun attacking Pakistan Army posts, but Pakistan continues to not only target Indian military establishments, but directly at civilians as well.
That's where it gets, completely escalatory. Thank you for all of those updates, Shiv, and of course, stay safe. Now, the other aspect that we're covering right here on Profit is that India at the IMF meet today will likely urge caution on a bailout package to Pakistan. At the end of the day, it all comes down to the money. And the second installment of $7 billion of a loan to Pakistan will be discussed today at the International Monetary Fund. Now, my colleague Agni has more details and has put together some context of what is this fund. India, of course, is saying that don't give loans to a nation who's using it to attack us. But Agni, give us the full picture.
So that is right. Today, an IMF board meeting is scheduled which will discuss the second installment of a $7 billion loan program that IMF had approved for Pakistan in 2024. Now, remember, the installment being discussed today and another climate-linked loan have already gotten an initial approval from the IMF last month. So today, loans worth $2.3 billion are on the table for Pakistan. Now, India has said yesterday, Foreign Secretary Vikram Misri had said that India is going to present its views on the Pakistan bailout program today. We have an executive director at the IMF who will be part of the board meeting. And also he had said that lenders like the IMF and World Bank should reconsider giving out loans to Pakistan. Now remember, Misri had also said that Pakistan is the epicenter for global terrorism. So if you look at it with that context, then Misri seemed to be saying that loans to a country which funds terrorism should be looked at with greater scrutiny. Now remember, Pakistan has been getting IMF bailouts since 1958. It's a long list of bailouts that the country has been getting, and the $7 billion loan that was approved in 2024 has now this is the second tranche of that loan that is being discussed. So $1 billion loan in that second tranche and another $1.3 billion that is a climate-linked loan. So India will be presenting its views on the bailout. We don't know what exactly our executive director is going to say at this board meet, but do stay tuned as we bring you more updates.
Right. Thanks, Agni, for putting that into context. In fact, let's listen in very quickly to what Foreign Secretary Vikram Misri had to say about that IMF meeting.
We have an executive director at the IMF. Tomorrow there is a meeting of the board of the IMF. And I'm sure that our executive director will put forward India's position. The decisions of the board are a different matter. You know the process through which they are made. But I think the case with regard to Pakistan should be self-evident to those people who generously open their pockets to bail out this country. And since you are from Bloomberg, I think you would have the data on how many IMF bailout programs have been very good. Thank you. Have been sanctioned in the space of the last 3 decades. And I think you would also have an idea of how many of those programs have actually reached successful conclusion. Probably not many. So I think this is a decision that board members have to take by looking deep within themselves and looking at the facts.
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, you know, he was my friend. We also had.
was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
एक्चुअली बताया नहीं मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आ।
Welcome back to India Market Open. Let's also welcome in our guests, on the show. We have Kush Bora, founder, kushbora.com, and Parag Thakkar, who are with us in the studio. Welcome to the show, gentlemen. A quick one, Kush, to start off with you in terms of the levels you should be watching today. I don't know how much water it will hold, but taking into consideration the kind of close that we saw yesterday, we've broken that 24,400. We looked at the next support zone as well, which didn't stay 24,300. How does it look like in trade today?
Sure. First, a very good morning, guys. And just a quick word on whatever's happening. I hail from Rajasthan, and I have family there, so we've been getting updates fairly regularly.
I hope from everyone's okay.
By God's grace and thanks to the defense personnel, everyone is. I think we don't, maybe we do give them enough credit. Their courage is our shield. So that's why we all sleep, peacefully at night the way we do. So action closer to home. So yeah, just a little concerned on that.
But frankly, it's personal for each person, no matter where they are in this country today, because this is personal now.
Right. So yeah, but that said, the show must go on. We've got a market to attend to, right? And Hiral, as you rightly said, 24,200 rather was breached at the end in the last 5-10 minutes of the closing yesterday. But I think we all know now, it was because of this escalation being factored in. I won't be surprised to see the 23,800, 24,000 support level being tested, as we've been speaking about for the last week or so. However, what remains critical is that, do we actually go sustainably below those levels? Of course, a lot of it will depend from the news that comes out, the escalation level and the duration for how long this goes on. But, as you've already discussed a couple of times on the show this morning itself, is that these geopolitical tensions usually turn out to be a buying opportunity from a near term, especially from a medium term perspective. So I will be on the lookout for any kind of pause or any kind of relaxation on the tensions front, and that translating into a bounce in the market. And investors, while they have to perhaps wait and watch on the sidelines for a bit, they have to be very nimble-footed, because the recovery in these cases is equally sharp. So look out for certain key levels, as we said, and more importantly, the recovery on the way up, which, as I said, could be equally sharp.
Okay, Prashant Khemka joining in this morning, founder of White Oak Capital Group. Prashant, thank you so much for speaking with us this morning, because we need calming voices right now, even in terms of what we're going to see in the markets next couple of days. Of course, brace for volatility, but what is the investment outlook at a time which is very emotional for each person?
Definitely, see, over the next few days, what happens is very, very difficult. In fact, impossible to say. It will be a function of how the situation evolves. Going by the past precedents, while volatility is there, while the situation exists, it normalizes very quickly as soon as the situation de-escalates. Now we can't say for sure when it would de-escalate, but we see it more as an opportunity at this time. The market is obviously, while volatile, if you think about it, was down 1% yesterday, maybe down 1% or so this morning. So it's not like hugely volatile. At least the market is suggesting that the probability of this thing getting out of hand at this time is fairly low. Yeah, because 1-2% here or there is not a big move if you think about it. So we'll be watching. The indicators of what is in store. The best indicator to us is the market itself, and remains to be seen how it evolves, how the market evolves, and how the actual situation evolves. But for us, we remain fully invested. We don't have any cash. We are not going to build any cash, at least as far as I can say at this point in time. Neither in client portfolios. Personally, I'm always fully invested, so that doesn't change. The current situation doesn't change that.
Hi, Prashant. Morning, Alex here. So I understand you don't have a strategy to hold cash and you're fully deployed, but you also, as a fund house, have certain strategies that are nimble-footed in terms of asset allocation. You have a multi-asset fund. You also have a balanced advantage fund. I'm just curious about the equity position on the long side. Currently, have you changed that at all, basis the current geopolitical uncertainty?
So I'm not on top of that. Obviously, the team, the fund manager, he'd be a better position to answer that. But as far as I am aware, there hasn't been any change related to what's going on in the last couple of days. The equity position that the fund has is as the fund is supposed to be a multi-asset fund. It is already, compared to the vast majority of the peer group, on the lower side. And I don't think we've made any changes in the last few days on that one. But I may be wrong on that. I'm just saying from what I've heard internally.
Prashant, request you to stay on. We need to take a very, very short break and we'll come right back. We need to talk about how to navigate this volatility in what is an uncertain 24-48 hours. We're going into a weekend when markets will be shut. We're coming back with all of that after this break. Stay tuned.
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल्स हैं। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
एक्चुअली मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर।
Welcome back to India Market Open. Prashant, my question coming to you over here is taking it from where Tamanna left in terms of what should you be doing in times of uncertainties. Now, if you talk about the past wars with Pakistan, you've usually seen initial drawdowns, which have then been followed by swift recoveries. And it's a typically two-phase kind of an impact that you see in terms of the markets. historical data suggests it's your sectors like media, metals and banks that have usually outperformed in times like these. And in case of India retaliating, you have sectors like cap goods, real estate and PSU banks that have led the gains. What should the strategy be now if an investor has to take advantage of this kind of a situation?
Thank you, Hiral, for the question. First of all, I'll just confirm to Alex that I checked during the commercial break that, and my guesstimate was right. The team hasn't made any changes to the equity allocation over the last few days. So that is that. Hiral, to your question, the reality in our view, in our experiences, a nimble-footedness or laziness, nimble-footedness certainly does not help over time in such situations. Maybe sometimes you can make money, at other times you'll lose that much, and at the end of it all, you'll be lucky to be break even from such moves. So I find, and if you think of just COVID, the last about exactly 5 years ago, think of tariffs just about a month ago, right? There was so much nervousness. Many people were calling it the biggest crisis after global financial crisis. So COVID was supposed to be bigger than global financial crisis. And then some people, investors, learned investors, and otherwise business people, they're talking about this being as bad, causing as much damage to global economy as the Great Depression, because the tariffs were last time as high as this, 100, or not 100, but somewhere in the 1930 or so. So the fear factor becomes the driving force during such times, emotionally charged, and to take any hasty decisions in such situations usually don't play out in favor of investors. And our way of dealing with it is basically to do nothing, to let things settle down, stay invested. And that has served us very well in the past. And I think that's how we are going to do it this time as well, Hiral. And that would be my suggestion to viewers as well. But each one has to decide really based on their perception of risk and their tolerance for uncertainty.
Right. Thank you, Prashant, so much for joining us on the show. And that's an important advice that's coming in for the viewers as well. In fact, let me also now go to Parag Bhai, who's in the studio. Parag Bhai, times of uncertainty, yes.
Yeah.
But from the market perspective, there are opportunities, and that's what the word on the street is right now, right?
Sure.
How are you looking at it? And from your past experience as well, how would you advise an investor to navigate this situation?
Yeah, so first of all, I would like to thank Indian government and our defense and armed forces. Because of them, we have this luxury of discussing markets. Yeah. So first of all, and I'm really sad that this thing has happened. And so many civilians have lost their lives. So it's a very sad thing. Now coming back to markets, I think what we in fact did is we created some cash, 10 to 12% cash in the portfolio. And so we would like to deploy it if market corrects, as it is shown in the GIFT Nifty, say around 300 points down. So we will deploy 25% of the cash, out of 10-12% which we have created in such panics. Generally, we try to do this, that when market is going up continuously, we raise cash. And when market falls big time, like this on this kind of events, we try and deploy some cash. That is how we try to give risk-adjusted alpha to our investors. And I would like to say that one should, in such times, actually one should remember that India is best placed in terms of macro. If you leave aside this geopolitical problem, see, crude oil is below $65, right? Current account deficit is good. You know, banking balance sheets are strong. Corporate balance sheets are most under leveraged, I would say. So I would say that remember the positives of India and keep investing in such big falls. And of course, you cannot expect tomorrow everything will recover. But over a period of 6 months to 1 year, you will make good money, especially in the stocks where you will see good earning growth.
So where would you deploy cash right
So I'm a very big bull of cement right now. I would like to say it publicly that in cement finally the senses have prevailed, and after 5-7 years we are seeing pricing discipline in the cement industry, and that is led by very simple reason. See, if you invest, if you put up a new plant, it costs you $80-90 per ton. For 12% ROE also, you have to make 1,000 rupees per ton EBITDA. So if a weaker player also transition towards 1,000 rupees per ton, the cost efficient players already can go to 1,200, 1,300, 1,400 rupees per ton EBITDA. And then that is a big delta to the profits. So I would say that a company like, for example, and disclaimer again, this is a company which I own in the portfolio. I would be a buyer on dips also. And I would say that, see, for good companies during bad times always do strategically good things. So for example, a company like Remco Cement, right? Now they are increasing capacity from 25 to 30 million tons at very low cost, $35 per ton, because they had front loaded their capex. They have already reduced debt by 400 crores and they want to reduce debt by 1,000 crores. So on one hand, your improved pricing will increase your operating profits EBITDA, and on the other end, you will reduce your debt. So next 2 to 3 years, you will have a completely different Remco Cement to get put together.
So top two picks are Ramco
and India Cement.
Ramco and India Cement. Kush, what
and
are
these are my portfolio stocks, and I would please advise your viewers to take it from long-term perspective, not trade, and especially in current volatile environment, and take advice of their financial advisors before you buy.
Today is an opportunity if you're a long-term investor to bet on the India story. Yeah. And not just because you're patriotic Indians, but because there is real value and fundamentals there. Let's be clear. We're not telling you, you're feeling patriotic today, come and put 1% of your money or whatever. There is real reason for what we're saying. Kush, what are your picks this morning?
So as I have been doing for the last week or so, I'm still going with a long and a short idea, and the shorts have really been paying off as you would expect in a market like this. But as you said, it's a good time to accumulate good stocks which you're getting at fairly decent prices. So Jyoti CNC continues to shine. You might get it at a slightly softer note this morning, but on the whole the structures are very positive. We've seen a good traction in the entire space, the likes of Power Mix also. So Jyoti CNC for targets of 1225, 1265 with a stop loss around the 1145 mark. If you want to factor for the volatility, you might even push the stop losses a little lower, but that's the kind of setup that the stock is showing. On the short side, I've got Tata Chemicals. I mean, who's ever made money in Tata Chemicals, right, for the last 5-7 years, maybe longer. So continues to remain on a sell on rise kind of a setup. 790, 777 are your targets on the downside. 815 is where you place that stop loss.
Okay. Let's pull up something like a Tata Motors, because the news that you saw overnight, and we took you through that as well, is the UK-US deal. Of course, it is perhaps the initial stages of a conversation on trade between these two countries. But it was seen as beneficial for Jaguar Land Rover from the perspective of lower tariffs being levied on cars imported into the US, which is a significant market for Jaguar Land Rover. Parag bhai, this is a stock that is down today at the start. Maybe it will react differently once markets properly open. I'm just wondering, based on the reaction that you've seen over the past few sessions, it has been moving higher because some of those headwinds seem to be dissipating. Would you go out and buy? Is it valuable for you?
We don't own it right now in the portfolio, but we are considering it now that Trump is also diluting his stance on tariff from UK, and we are hearing that there will be a trade deal with UK very soon. I think it is a good contra buy. It has fallen significantly from its high. So definitely it is under our consideration list.
Anything on the charts, Kush, just to round out that conversation on Tata Motors?
Well, from a medium-term perspective, this is offering a good risk-reward ratio where 600, as we've spoken multiple times, has been that support zone, has been that stop-loss level. And on the upside, you've got 750, 800 plus kind of levels. So maybe not something immediately because the stock's already run up quite a bit, about 10%, a little more than that. But yes, from a medium-term perspective, with that kind of a bottom in place, it now offers a good risk-reward ratio, and you could start accumulating.
Start accumulating at Tata Motors. That's going to be interesting. L&T, that's one stock. How are you looking at it, Parag bhai? Because, right now when you're saying that probably this is the time where you should be looking at accumulating, L&T is not a trading bet. Usually people find opportunities to look at L&T from a long-term perspective. Taking the way numbers have come in, because they've raised their FY26 core EBITDA margins to 8.5% versus 8.25 last year. Good revenue growth, it's beat a guidance of 15%. Does that tell you a story that this is the time to look at L&T?
Yeah, I think we already have L&T, good portion. I think we are equal weight in L&T, and we continue to like the stock based on the current order book prospects, and I think with steel prices, with cement, with I would say that commodity prices also are being lower, so the margins can improve, I think. The only thing is that oil below 65, how it will shape up for them in terms of Saudi Arabia and Middle East orders. That is something which I would like to monitor very closely, because generally the Middle East and Saudi Arabia budgets are made at, by taking crude oil at $70, $75, and crude oil is now below $65. So I think going ahead after 6 months or so, you will have a little bit of this issue coming into L&T, that, and this is what I assume, that the Middle East orders, which are right now in full swing, in fact, can slow down a bit because oil prices are low. And so that affects their budget.
But having said that, oil prices have spiked in the last 24 hours in the hope that there will be an US-China trade deal. So, you may see
so oil might be at the bottom. We don't know.
Gold has in fact come off. Because
so
of
oil
this.
might be at the bottom, because generally at around 60, unless there is a global recession worry, a big recession worry, it should not fall below $55, $56 in my view.
Correct. Just looking at how pre-open has eased off before we go in, just about 4.5 odd minutes for markets to close. So you are 1.5% down, and that was expected, between 1.5% to 2% on the key indices. And that's okay. You are opening below 23,400 to be expected. The advanced decline ratio is going to look skewed. You're going to see equal weights of pressure in Nifty Bank, Nifty IT, etc. Just look at what's working. Even if you look at the Nifty 500 and your top 3 gainers, I'm seeing a Bharat Forge there, 1.5% up. L&T, Bharat Dynamics. So that, of course, will keep changing. I'm just wondering, Parag, this question coming to you. Is there a defense play here today that we need to look at very closely? Bharat Forge also up because there is a quote from Baba Kalyani saying that his team has been called to Delhi. But, procurement doesn't begin in the middle of a war. That is, we're already well set, and the procurement cycle is 5 to 10 years and more. What we're using today, we have planned about it half a decade in advance, or at least 2-3 years in advance, as the timeline is. Is there a defense play today, or is there a momentum play for defense stocks today?
So basically, as you very rightly said, we don't play into narratives, because narratives generally take too long a time, and market stretches valuations in the first and then realizes that, oh, narrative is not playing out as it was planned. It has happened in so many cases, in retail, for example. So I would say that we stay away from narratives. We focus on earnings and cash flows and valuations. And that way we were comfortable with HAL in our last correction, and that I already mentioned. We hold around 4.5% weight in the portfolio of HAL and around 3.5% L&T, and we'll continue with that. It is not something that today, because there is a war kind of situation, we are going to buy defense stocks today.
The problem with, just to complete that point, the problem with narratives and Chinese whispers, unfortunately, is that by the time you hear it, it's possible that the message has changed.
No, but the other aspect that we need to consider is from a forward-looking perspective, where the replenishment will start happening in terms of the overall system. And that's when your orders will start kicking in. The new cycle in terms of order books could come in, and probably you could see a revision from a longer term perspective in terms of the order book and the revenue guidance, taking this into consideration, right? So probably a long term bet, but very quickly, Kush, anything that looks interesting on the charts from the defense side?
I'm afraid not, and as counterintuitive it is, a lot of defense names haven't really done as one would expect. So I would wait it out. Perhaps something like a BDL, which is and BDL and a BEL, which are still holding ground, are the ones to consider. But I wouldn't really play them just now because of the kind of situation that we've got. They've not played out in terms of the price action.
Specifically, question on Bharat Forge on charts.
Again, a wait and watch, because you're seeing some consolidation. There is a bit of a gap up opening, but I'm not sure how sustainable that is. So I would, in fact, as a strategy, I would want to wait for the first 15-20 minutes, maybe even half an hour, to see whether we regain any lost ground, which I think there could well be a possibility by the close of the session today. But if things slide further, you might want to just sit this one out today.
Okay, very quickly, Parag, I know that defense play, we've already answered that question, but I'm just wondering, companies that manufacture artillery, is that something that you would look at?
Bharat Forge has fallen significantly, so Bharat Forge can be considered. Right now, we don't have it in the portfolio because generally we were a little bit concerned about this Trump tariffs having a overall growth impact on the world economy, and Bharat Forge is very linked to world because it is a large manufacturer of CV components, right? And CV depends on economy. So that's why we have waited till now, but it's a good stock.
Weren't very pretty. Yeah. In fact, their defense portfolio itself was a major drag in terms of this quarter.
But see, remember, due to that defense thing, it went up to 1850, and now we are at 1100. So you have to remember one thing, that all these things, that narrative, that when the artillery gun order was expected, it was just rising and went up to 1800, right? And now it is 1100. So I think.
Pre-open indicating that Bharat Forge will be in action. Just about 12 seconds to go as markets open. Be set for volatility in the beginning. I mean, if you don't see a drawdown this morning in opening, it would be very, very unusual. We have seen an escalation of conflict, unprecedented escalation of conflict and aerial battles between India and Pakistan last night, attempt to attack our cities. So you are going to see that drawdown, just about 1% down. Not bad at all. You know, this is not a market that is panicking. This is a market which is understanding what is happening. We're above the 24,000 mark right now. It's about 200 points down, which was expected. The Nifty IT about 0.5% down. That's all right. Bank Nifty showing some signs of weakness. This is the only one in the green, right? The Nifty defense, as one would expect to see. Even the Sensex just about 0.5% down. Actually, I don't know if it's too early to show an intraday for the Nifty, but would there be some recovery coming in? Because, you know, your index is actually looking pretty robust in terms of how it's climbing. That drawdown reducing rapidly or above the 24,100 mark. Is this Indian investors coming and saying we're buying India right now? Even VIX has come off. You were seeing the VIX at above 10% up, about 6.5% up. So of course, above 22, that means that volatility is high. But I would say that this is a market that is not looking that nervous, considering the kind of night that we've all had. Let me pull up the heat map for the Nifty very quickly and just give you a sense of what is happening there. So, okay, you have 4 stocks in the green as was expected and a whole host of red also as expected. But what's working? Titan. Numbers were good. Stellar numbers on Titan. That has been heartening for the street. L&T, we've talked about again a good set of numbers. Bharat Electronics, BEL, you're going to see some action on the defense front as could be expected. Kotak Mahindra Bank, Tata Motors there on the edge of maybe turning positive in just a few minutes from now, perhaps. What is really not working? Power Grid feeling some pain, Eternal, Coal India, but see the maximum drawdown even on the top 50 stocks on the Nifty is about less than 3%. So I would say, all things considered, this is not a bad start this morning, even as we'll have to watch very carefully whether the Nifty can stay above the 24,000 mark. That's one key level to watch out. Of course, you've had a gap down opening, which was to be expected, Alex. I think it'll be also important to see what kind of a move on the broader markets. But this is the line graph I was just waiting for. Look at how you've plunged down in the opening. And of course, it's just been a couple of minutes. But having said that, the recovery that you're seeing thereon. So we have to see if this stays robust. Yeah.
Let's pull up the broader markets as well, just to give you a sense. And remember, yesterday you saw a sharp drop in the equity markets. Of course, you are off the high point, off the low point for the broader markets as well. The mid-cap index trading now with cuts of less than 1%. Small cap index still about 1.5%, 1.4% lower. The market breadth at the open understandably a little bit weak, but then it might just change. That texture might change over the course of the morning session. And there you go. So you have the sectoral heat map. This kind of gives you a similar picture to what the Nifty 50 heat map was telling you. A majority of the screen in the red, but the defense pack understandably in focus, gaining about 1% or so. Consumer durables as well as a pack gaining about 0.75%. On the bottom of the screen, again, not too much in the way of sharp declines. You have the realty pack, the oil and gas pack that are under a little bit of pressure. They were in trade yesterday as well. That continues, but cuts of about 1% or thereabouts. Nothing really to worry about. Now, let's pull up the list of stocks that are in focus, and this is primarily the watch list that we were telling you about before the start of trade. Let's pull up something like a Z and talk about a majority of these stocks in the context of the earnings that they have put forward for the quarter ended March. Z is up and about. Good set of numbers coming through for this company. Lower costs and in fact lower taxes paid during the quarter have aided that bottom line, and that is reflective in the way that it is seeing buying in trade today. Union Bank of India, let's pull that one up from the banking pack. Strong PAT growth. Profitability is improving. This is something that is evident in a few banks where they've seen an expansion in the NIMs, and the profits have, as a result of which, gotten a bit of a tailwind. It's up about 3.5%, reacting to the numbers as well. Brigade Enterprises, it's set to develop a new property, or rather new project, worth 2,000 crore rupees in Bengaluru, as I understand it, down about 0.7%. And that realty pack as a whole seeing a little bit of pressure. So this might really be a reflection of that pressure in the realty pack as a whole. You also have Kalyan Jewellers that might be reacting to its numbers. It's a decent set of numbers. It's a robust same stores sales growth that the company has reported. It's up about 0.33%. Biocon, EBITDA and margin have beaten the estimates, and from the pharma pack, it's gaining only about 0.5% or thereabouts. But in the context of what we're seeing today, a positive move is telling. What more? REC, this is on the downside. You have a miss on the guidance, which is something that the street is not going to like. Remember that the power financiers have been in focus, but the guidance looking a little weak is not something that the street is going to like. Pidilite, the EBITDA is a miss on account of higher marketing spends by this company, but still it's reacting positively. It's up about 1% or so despite that Q4 miss. Couple more stocks. Muthoot Microfinance has seen its credit cost rise on account of asset quality woes, and that is reflective in the kind of selling that it's seeing, 8% lower at this point. And finally, Fine Organics, once again a weak quarter for this company. It's seeing selling. You have had a worsening of the operational metrics for this company. That's reflective in how the share price is reacting. So broadly, you have understandable reactions to key developments. The tone seems to be a little cautious ahead of that weekend, Hiral.
Absolutely, the tone is cautious, but what's interesting is the kind of stocks that are holding out as well. Though if you talk about the advanced decline ratio, absolutely in favor of the bears, around 240 stocks which are on the advanced side on NSE versus 2,000 upwards kind of a number on the losing side. Let's just pull up Titan and Kalyan Jewellers as well. Titan, a 4% up move that's coming in on that counter on the back of earnings. And with that, L&T is also zoomed. Parag bhai, a quick view in terms of the jewelers, Titan and a Kalyan Jewellers. The way Titan is buzzing, is this a sector to be in, taking into consideration the way gold prices have panned out? Probably concerns that could come in terms of volumes going ahead.
Yeah, so basically I am not very gung-ho about this particular theme because gold prices have gone up significantly, and but Titan, of course, full credit to them. They continue to do well, and they continue to surprise markets. So Titan is a stock which I would definitely keep on my radar on every dip, but no other jeweler for sure.
Okay, so that's with regards to Titan and Kalyan. Anything from this pack, Kush, that is coming to your radar? Any opportunity you're seeing a breakout on a Titan? 3,500 is where it's at now.
So definitely a clear breakout on this one. 3,400 was the level that it was resisting around for some time, for the last week or so. Today we've got a good breakout. The volumes at open are quite strong. So I think this momentum could well last. But from very near-term perspective, I think if you've had a position, then it's a good time to book some profits partially at least and take some money off the table. And if you want to enter, then closer to the 3,400 mark, 3,430 mark is when you should re-enter. Just a quick word on the Nifty. While we did mention very briefly just before open that we might end higher, at least compared to from where we are starting off, and we are seeing that. What is also interesting is that if you look at the last 10 minutes data, for yesterday's closing, the heavy short selling actually came from 24,300 to 24,250 mark, right? So anyone who shorted very heavily around those levels, in the last 10-15 odd minutes, is still making profits. So what we're seeing right now is a bit of a covering of that only. Whether this is sustainable and you don't see any further shorts, that remains to be seen. So just while you take heart from the fact that yes, we've already recovered quite a bit of ground from where we opened, I wouldn't call it out of the woods yet. As long as we hold above the opening lows, I think the markets are in good state.
Okay, pull up something like a Mayur Uniquarters. And this is something that my colleague Mahima pointed this out. It's doing well in trade today, up about 10%. And just pull up the numbers on the screen if we can. The revenue is up as much as 13%. The margins have expanded just a tad bit, 22.7%. The PAT number is as much as 30% high at 41 crore rupees. Any coverage at all? Have you looked at this company, Parag Bhai?
Yeah, I have looked at this company in the past, and it's a decent company. And they were about to get orders from Mercedes, and at least that is what till my memory goes. But it's a genuine good business, good company into good products. And I saw the results just today morning, and results were looking very good.
Anything on the charts that you would say on Mayur Uniquarters?
Good move, and it's coming on the back of some consolidation that you've seen, but consolidation with a positive bias over the last few sessions, in fact negating the market trend that we've been seeing. So a good move on this one. 505, 507 levels were a bit of a resistance, and right now it's sustaining above that. So as long as it stays above this, I think you've got a good up move coming along its way. Remember that the stock's actually fallen off a cliff from those 650 odd levels late 2024. So the risk reward ratio for you will be fairly favorable. So if you have it, you should continue to hold. If you want to buy afresh, you could still buy. Keep your stop losses around the 500 mark. On the upside, you're gunning for targets of 535 and about 555. So a good move on this one, especially on a day like this. If you get a strong close, then yes, further upsides in coming days.
Just want to highlight what's been happening in the last few minutes. The breadth has improved. Just pull up the advanced decline ratio. The breadth has improved in the markets. There's a clear focus on defense, and this is something we spoke about before market started as well. What's also coming to mind is Titan. Look at the run-up in Titan. It's not half bad at all. Titan about 4% up this morning. Larsen and Toubro also in focus, and we'll get you detailed reports on what exactly is there in the numbers, which has got the street excited. But a Zentech, about 5% above. Bharat Dynamics, BEL, HAL. Now, I know we've been speaking about how this is a momentum play, but the fact is it is a momentum play. Kush, what would be the strategy on any of these? Would you buy into this momentum? Because this is something that we're going to be seeing for the next few days at least. You're going to see this focus on defense, on geopolitical and regional concerns.
So, if I look at it from a purely technical perspective, just keeping everything out, look at the price setup for some of these, even when, the tensions started, they actually saw a bit of profit booking. Today, you're seeing some sort of recovery. Why not choose a stock which has actually seen a positive bias and an up move in the recent days for the last few sessions, and that is Paras Defense. This stock did not correct. This did not see any kind of profit booking or any kind of consolidation with a negative bias. Today, also, if you see the stocks actually moving higher, up by about 3.5%. So, if I were to bet purely momentum, then Paras Defense is the stock to go with. On the upside, you're looking at 1440, 1475 kind of levels, and there's a support zone near the 1355 mark, which has acted pretty strongly over the last few sessions. So yes, the BDLs and HALs of the world could continue to rise after the kind of profit booking that you've seen. But if you're going for a pure momentum play, Paras Defense is your stock.
Okay. How are you looking at Idea Forge, a drone manufacturer, seeing gains of 9.5%? Numbers have been good as well, and that's one of the reasons why you're seeing this kind of strength built up on this counter. A good buy at current levels? Kush? Yes.
Well, I think it's already starting to show in the price. You look at the volumes that have been stacked up yesterday, and today we've only been about 10-15 minutes in the open, and the volumes have already crossed yesterday's entire day's volume on this. So I think this is a play that the streets already sensed. It's given a very clear breakout above the 395 mark. I think this is going to sustain the kind of momentum that you're seeing, and a good strong volume backed move. It's the theme as well. Currently. So I think you could well continue to play this. even after the kind of rise that you've seen over the last 2 days, yesterday and today included so far, it's far away from those overheated levels. So yes, there is a good chance that it could move higher. On the upside, 455 and about 480 are your targets, and the resistance level of 395, the erstwhile resistance level, will now start acting as a stop loss.
On that note, gentlemen, thanks so much for joining us, Kush as well as Parag Bhai in studio. We are off the low point of the day for the benchmark index, the Nifty 50, trading with cuts only about 0.6% right now. The Nifty Bank also off the low point of the day. We'll be back on the other side to get you action from the banking space and everything else that you need to know about live markets. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole.
Welcome back. You're watching India Market Open. Quickly on to a management and on to a big voice from the PSU banking space. We have K. Satyanarayan Raju of Canara Bank joining us with regard to the Q4 numbers of Canara Bank. Good morning, sir. First off, I want to start off by understanding growth. It's been strong for you in FY25. Can it sustain in FY26? And will you prioritize deposit growth? Is that also going to be the priority?
So last year, the guidance what we are given for credit is 10%, and the deposit growth is 9%. As always, we give little conservatively the guidance and we surpass the targets. This year also proved our stand is correct, that the advances growth as against the 10%, we achieved 11.74, near to the 12%. The deposit growth also is as against 9%, we could achieve 11%. With this growth, our CD ratio is as on date, it's around 73%. If you can continue with that 9 to for the next financial year, we are given the guidance of credit growth is from between the 10 to 11% and the deposit growth is between the 9 to 10%. Why we are given that growth is, even with this growth percentage 10 to 11 and 9 to 10%, our CD ratio may go up to 75%, which is also is very comfortable for us. We have that cushion. But at the same time, we don't want to be complacent on mobilizing the deposits because of the situation in the banking industry, that some banks are finding it difficult in mobilizing the deposits. We continue to give the priority on the deposits. Don't mind maintaining at 73%, but we continue to grow it. But though we are given it's 9 to 10%, the guidance is only to keeping in the minds that the CD ratio.
Got your point, sir. Where do you expect margins to bottom? It's a rate cut cycle.
We are given a guidance of 2.75 to 2.80. For the previous year, we could achieve 2.80 cumulatively. But the December quarter, it was 2.70. For March quarter, it was slightly improved to 2.73. Now, gradually from 1st April onwards, the cost of deposit on the bulk and the CDs are coming down gradually, but still we should see the downward revision in the retail term deposits. Once that starts, then I think the interest rate on deposits also will continue to soften. Then our reaching that 2.75 to 2.80 may not be problem. But first, because already 2 times the RBI has reduced that repo rate cut is there already 25 basis points, which we are extended to all our 44% of that book immediately. And we are also expecting that another two times may be there in the rate cuts in the current financial year. So that also will be passed on to that 44% of the book. But the same level, the same thing cannot be passed on to the deposits. So there will be a gap of almost 4 to 6 months time to pass it on this downward interest rate movement in the deposits. That to that extent we have to absorb that. That's why in first quarter and second quarter we may continue to be at 2.73, 2.75 that, and we are confident, we are hopeful that this third quarter and fourth quarter will help us in maintaining the 2.80.
Right, so the understanding is you've recovered around 1700 crores from Bhushan Steel, and if the SC ruling is to be followed, you might have to reverse that recovery that you've made. When do you expect, will it be a provisioning firstly? When do you expect the provisioning, Q1 or Q2?
Actually, on this particular account, I don't want to comment on that because it's too early to discuss about that. It's a judgment has come. There are several opportunities, offers, the chances are there for all the stakeholders. Everybody is in the discussions mode. I feel that it is too early to discuss about that.
So sorry, but what do you mean by offers? Do you expect to get a better value for the asset?
I don't want to comment on that this much earlier. So it's too early to comment on that particular specific account.
Okay, so point taken. So with regard to FY26, what's the credit cost guidance like, and what's and how comfortable are you with that guidance? What's the recovery number going to look like as well? Give us perspective.
See, sir, it's actually the credit cost what we are given the guidance for next financial year. It is a 0.90. This is also, again, let me say that conservative figure only. Why we are given that conservative figure is 2 years back we have taken a stand that though we were at 87% compared to the peer banks PCR of 95 to 97%, we want to come above 95% in the shortest possible time. You can see that the just concluded financial year, almost we improved our PCR 360 basis points. That's the reason actually our credit cost is looking at 0.9 or 0.91%, whatever it is there. Otherwise, in actual purposes, if we don't provide that additional NPA provisioning, our credit cost will be much, much below. Since still we are at below than the 95%, we are at 92.70%. Our efforts to continue the strengthen the PCR will continue. That's the reason, keeping in that mind, we are given the credit cost at a conservative type of 0.90. But definitely, even after making the provisioning, improving the PCR, our credit cost will be much better than what we are given the guidance.
Well, and recoveries, what's the FY26 target?
See, our always last 2 years, we are given a guidance that our recoveries and upgradation together will be much, much better than the slippages. And we have proved continuously, except to the June quarter, we have proved in all the quarters that our recovery and upgradation together is much, much more than higher than the slippage. This tempo will continue, and there won't be any change in this, and we are confident our systems have been matured. We are able to achieve those things quarter on quarter, even month on month. But the only thing, the benefits what we are getting, it will continue. I want to say that in the technical return of recovery. Last year when we said that we have recovered 5,900 crores in the technical return of accounts, everybody has asked us that whether it continue or it will be a one time. When we confidently told that it's an ongoing process and it will continue, since our return of book is still about 70,000 crores. And that has proved in the just concluded financial years, we could recover almost 6,800 odd. So our recoveries, technical return of also, earlier also I given a guidance that the minimum 5,000 crores per annum can be recovered, and our recoveries and the upgradation will be much, much higher than our slippages. That is the reason our guidance in the gross NPA, we have given it from present 2.94 to 2.50, and the net NPA has further reducing that point from 0.70 to 0.60.
Well, sir, the other piece is with regard to other income, it's witnessed sharp growth. Any one-offs there? Is this sustainable?
There is no one-off such issues. If you see that quarter on quarter sequentially, there is a fee-based income is increasing it. One, the reason is Because of the regulatory guidelines, last year, 1st April onwards, all the penal interest, whatever we are collecting from our borrowers, that has to be accounted under the fee-based income instead of interest income. To that extent, though there is a dent in that NII, but it doesn't benefit in the fee income. We got it, it's only account reclassification. The second benefit what we are getting is the interest on the fee-based income. All our service charges have been automated 100%. Now there is no human intervention in collecting the service charges. That has almost mitigated or minimized that leakage of income. That is also helping our fee-based income on that. Nowadays, we are considering a non-fund based business growth also as a part of our business strategy. And while giving that outlets, we are giving special targets in the non-fund based, that as a part of our business strategy to improve the fee-based income. We also started one vertical in the collections, that is like a NACH mandate or ECS or something, that to help the corporates in getting it done. That we have started 15 months back. In the last 1 year, we got almost 130 crores additional income. I'm sure that this year we are targeting it to match it with around 300 crores from that vertical, single vertical only. And our card business also is growing year on year. That also will help us in getting the fee-based income. Wherever possibility is there, we are exploring that possibility, and we continue to focus on the fee-based income.
So just trying to sum this up, no NIM pressure from Q4 levels. You seem confident with regard to other income. OPEX is well controlled. Credit cost to be at the same level as now. So 1.25% ROA is what you've clocked currently. Why give a guidance of 1.05? Where's the gap? Can you do better? Is there an upside surprise to ROA?
See, we have given a guidance again in this where ROA also is a conservatively at 1.05. But in the December quarter itself, 1.09, we could achieve that. This conservativeness we have given it for conservative, but actually our net profits are, if you see that last 9 quarters ka journey, no quarter we could show a lesser profits than that previous quarter. So our progress, steady growth in the net profits will continue. And our operating profits also simultaneously, you see that it is growing in the double digit. The year on year, if you see that we have grown, March operating profits are also more than 12.24%. These are all that will help us, our return on asset definitely be above what we have given the guidance. I'm sure that it may be around 1.10 also, it will be there cumulatively if you see that.
Interesting. Thank you so much, sir, for joining us, giving us those views and perspectives. Canara Bank up 1% in trade post numbers, which actually came out yesterday. So per se, it looks like a decent set. But with that, we'll actually slip into a very short break. More on the other side. Stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, बताया नहीं मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually Baniya vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियां भी लड़ लें तो हम झगड़ा नहीं कर सकते.
मर जाएंगे बट नहीं हटेंगे.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching India Market Open, and I would say markets are down, but some recovery from the kind of start that we have had. I just want to pull up the stock of Bharat Dynamic, 7.5% up on Bharat Dynamic. It's all about the defense play this morning, even as India has successfully thwarted an attempt from Pakistan across the coastline and across the border shared between the two nations. So 7.5% up on Bharat Dynamic. That's the stock to watch this morning. So is Zentech, about 5% up. Bharat Electronic, L&T on the back of numbers. Data Patterns about 3.5% up. In fact, let's pull up the components of the Nifty Defense Index as well, because that's the one that's really firing. What's not firing, of course, is banks, as one would expect, that you would see an overall pull in the markets after what has happened last night. But among Nifty PSEs, even defense stocks firing more than anything else. Canara Bank doing fine because of its numbers. You just heard the management on the channel. HAL also doing pretty okay, but I wanted to look at the defense index actually. KPR Mills also in focus this morning, but 5% up. Union Bank on the back of numbers also looking pretty robust. L&T is the stock to watch, about 4.5% up. Titan is the one that's truly shining on the back of numbers. Titan is about 4% up, and you'll hear from Ashok Sonthalia just in a few minutes from now on NDTV Profit. You're also seeing Tata Motors. I want to pull up the Tata Motors stock for a second, because the US-UK deal that has been inked yesterday, the trade deal, has ensured that the overhang that Tata Motors was seeing with JLR's exports into the US has now come off, which is why you're seeing an up move there in the Tata Motors stock as well. But Hiral, I think what is important to note is that the advanced decline ratio has improved in the last 15 minutes or so since markets opened, and the Nifty managing to stay above the 24,000 levels. Yes, 0.75% down, but still managing to stay on.
Yeah. And let's just pull up India VIX as well, because the way India VIX, Tamanna, spiked in those last 15 minutes of trade really told you some story. And there you go, the uptick continues. You're 6.5%, 7% higher. You're above 22 as well. 22.43 is what you're tracking in terms of India VIX. So there is that kind of uncertainty, volatility and underconfidence that does prevail in terms of where markets go. And that's what the VIX story is telling you overall. Apart from that, let's just pull up our MCX on the screens as well, because in times of uncertainties, you do see that pressure coming in on a MCX, taking into consideration a commodity exchange that is trading at the day's lowest levels with cuts of around 6% coming in there. Poly Medicure is another one which is seeing a beating for a second consecutive session. EIH Hotels, Indian Hotels, these are a few of the other names which are down and about in trade. And on the gaining side, Idea Forge is an interesting one. Zen Technologies, KPR Mills, and you have a Union Bank which is reacting to the numbers. So overall, an interesting day of trade. A lot of stock-specific action is what you're seeing. However, there is that some bit of support and resilience at levels of around 24,000 in terms of Nifty 50 as well. But let's shift focus to Titan, as Tamanna was mentioning, an interesting play on the back of earnings. In fact, we spoke to Ashok Santalia, CFO at Titan, to decode their quarter gone by. Let's quickly listen in to that conversation.
Overall, your jewelry margins have improved, and this is of course on the back of a one-off, which is due to hedging. Just wanted to get a sense of how the margins would have been if that one-off would not have been there. And secondly, what is the outlook like in terms of FY26 margins?
So, yeah, thank you very much, Mahima. I think we are quite happy and satisfied with the Q4 performance. As far as margin is concerned, just minor correction that while it was a combination of operating leverage through better cost management and hedging gains, which came through the forward premium. And they are also, part of it is permanent and part of it can get reversed, going forward. FY26 started well. Akshaya Tritiya was this time in the month of April, and it has gone well as far as we wanted it to be. Gold price increase, unrelenting increase, has been creating pressure on various aspects of the business, including consumer sentiment. And therefore, sometimes it is difficult to predict FY26, but still we believe 15 to 20% growth range for the company. And for jewelry division, we have guided 11 to 11.5% EBIT margin band we should be able to maintain if everything remains the way they are. Lot of uncertainty going around us. So to that extent, we must understand that these things can undergo change if things really doesn't improve from here.
Right. And just on that, because gold prices are on the rise, a lot of these jewelry companies I, read, even in terms of their business update, there was a trend that I've observed is that gold coins and gold chains are something that have really picked up. Because people are not now willing to pay that making charges part, right, in terms of buying gold coins. Just wanted to understand, because for you also gold coins was a significant growth of almost 64%. Is that a trend, a structural shift because of the rising gold prices that you are seeing, and is that here to stay?
So when gold prices have all of sudden went up, in last quarter also, while for last 12 months they have been going up, but last quarter again saw another burst of price rise. People generally, the investment orientation takes center stage, and at that point of time, coin or low making charge jewelry becomes a preferred vehicle for people to invest money. Adornment takes a bit back seat. But as we move into Q1, and we all know that this Q1 compared to last year Q1 have much more spread wedding days, etc. And weddings would require ornament and adornment kind of jewelry. There people will not be looking for coins and simple chains, etc. So we think it's a temporary thing. Once people get used to this level of pricing, because right now there is still expectation in the mind of consumer, perhaps some correction would come. And it may not be completely unfounded, but if that doesn't happen and people still get used to this level of pricing, then I believe again adornment would start taking center stage.
Understood. And in terms of your overall gold lease cost, that has moderated, and even that has, overall has had a positive impact on your margins. Just wanted to understand as to what this means in terms of improvement going forward as well, and overall, how does that impact your financials positively?
So gold lease actually, Mahima, has been a great product for Titan to get into, the gold procurement and our working capital management. We have been enjoying very, very fine rates, best in the industry, and availability of limit is also pretty generous for us compared to some of the competition. What happened after the US tariff situation started escalating, in a knee-jerk reaction, GOL cost actually doubled, more than doubled in February, March. which has started settling down back to the level, but still it is 75 to 80 basis point higher than what it has been in FY25. So to that extent, this development is will create some pressure on the interest cost. It has settled down. It might further settle down if situation improve. But otherwise, just in economic or financial term, FY26 will see some higher interest charges in our PNL because of the dual interest rate.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बनेगा।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
Welcome back on our Corporate Radar. This morning we're talking to Sula Vineyards on their numbers in Q4. A bit of a muted growth on revenue and EBITDA, but in line with expectations. Slowdown in urban consumption has been responsible for the decline in revenue as well. We're joined by Rajiv Samant, CEO of Sula Vineyards. Rajiv, very good morning. Thank you for speaking with us here at NDTV Profit. How do you recap Q4?
So Q4 has continued to see some the urban slowdown, as you mentioned. We are, though, however, seeing some green shoots. We had always guided that Q1 would look better because last year Q1, if you remember, there were elections. So we had national elections and we had state elections in Maharashtra. So, fingers crossed, cautiously optimistic that Q1 should be a better show. And we do believe that the worst is behind us.
Tell us what the overall demand is looking like, because urban demand that you're saying is slowing down. Are the fundamental factors pushing behind that really changing? One would argue not really, Rajiv. So when you're saying the worst is behind us, I'm just trying to understand why.
Sure, you're right. So, a couple things to remember here. You have the sort of the bigger factors playing out. And yes, there's still that slowdown. We still see that. And now, of course, we have some amount of heightened uncertainty given the situation. However, having said that, we did have specific factors that impacted us. So you always have wider macro factors and then you have micro factors. So yes, in the case of the macro, we are still not out of the woods yet. We do hope that, the tax cut, interest rate reductions are going to come into play pretty soon. However, at the micro level, things like the elections, then we had the Pune shutdown, etc., which really impacted us in FY25, and those are firmly behind us in FY26.
Rajiv, sorry, just one question on your margins. The slide that we've seen from 24 to 22.6%, this was because of these shutdowns you've mentioned. It's because of volumes coming down, or has there been pressure elsewhere?
Well, when you don't have a significant sales growth, it does impact on margins. Our business is pretty sticky. Grapes, you got to sign long-term contracts, and if sales slow down, you already have the grapes that you're looking for. Some of those grapes are more expensive grapes. They end up going maybe into cheaper wine when you don't sell as much of the wine as you expected. So you do have sticky costs. However, looking ahead, we've really taken a hard look at our cost structure, and we are very confident that we're going to have a good bounce back in terms of profits and a good reduction of costs vis-a-vis the top line in FY26. So we are adjusting to the new reality, and we're confident about it.
Good morning, Hiral on this side as well. So clearly, the concentration now for you is going to be your premium segment, which is almost 77% of your total revenues. Taking that into consideration and the efforts that you're making on the cost side, how are you expecting FY26-27 to then pan out, not only from a margin perspective, but also from a top line perspective? What will be that growth range that you should look at? Because 25, yes, it has been slow with a 2% growth. I mean, let's be honest, it's been a slightly tough year.
Good morning to you, Hiral. Yes, FY25 has been what I would call a reset year. So after 3 excellent years, yes, we have had a slower year. 2% was not what we were hoping for at the beginning of the year. We were hoping to do much better than that. But looking ahead to FY26, we do feel that the worst is behind us, and we should see a much better sales growth. And definitely, what we are looking for is we would be disappointed if we did not deliver double-digit earnings growth.
Okay, so double-digit earning growth is what could be on the cards from here on. Apart from that, if you have to look at the demand in terms of wine, how are you seeing that pan out? Because recently, in terms, if you have to look at IMFL versus beer, that's where the juices, where people are talking about how the shift has happened between these two. Now, if you have to look at wine as the third component, how are you looking at the demand picture?
So we're looking at a stronger demand picture for our more expensive wines. So, we broadly categorize into 4: popular, economy, premium, and elite. And our elite wines have shown the strongest performance this year, which is really good news for us, because these are wines typically between 1,000 and 2,000 rupees. There we've seen double-digit growth. All the other categories, unfortunately, have been impacted by the urban slowdown. And also there has been some unsustainable discounting in these segments that we can see it sort of drawing to a close or definitely reducing. We ourselves have cut our sales and distribution expenses in Q4 and again in Q1. And so, we are confident that things are getting better on the discounting front, which should benefit us. But our elite wines, that's been a big success story, especially our Source range. That's been our standout. So we see good times ahead for that.
Okay, so good times ahead with regards to where overall demand goes. Any new launches planned, Rajiv, in terms of FY26? And if so, in which segments would they be?
So very interestingly, for around 5 years, we did not have a new launch in our premium segment, the classic Sula series, the really well-known Sula Sun. And we heard our clients, we heard our sales force. And so in FY25, we launched our first Merlot as a Sula Merlot, the classic, not in the Source and Rasa range. And I'm happy to say that you can expect within this quarter itself, hopefully, one more launch within our Sula Classic range. That's all that I would like to say for right now. There's more ahead. But again, we are strengthening this time our sub 1,000 rupee portfolio, because, the bulk of our consumers, of our clients, are ultimately in sub 1,000 rupees. Maybe we've neglected that segment for new launches a little bit over the last 5 years. So we're going to make up for that.
Right. So I think that's what I think consumers will be watching out for as well. But thank you, Rajiv, so much for joining us on the show at NDTV Profit. Always a pleasure to speak to you. So clearly, as Rajiv was mentioning, a reset here in terms of FY25, the stock being slightly resilient today with marginal cuts of 0.8%. If we can just quickly have a one-year chart as well to understand what the journey has been so far, because clearly the year was not something that the company appreciated themselves as well. But there you go, 45% is the kind of cuts that you've already seen on the counter. But moving on, another pharma major, Biocon, that has announced a good, strong set of fourth quarter numbers. Varsha joins us with the details. Varsha, in terms of where Biocon goes, the stock is now under pressure with cuts of 1.5%. What has worked, what has not worked, and what are the key highlights?
Yeah, thank you for that. So, Hiral, technically good set of numbers. Technically, operationally, company has given good set of numbers. If you see, profit did beat estimates, but the revenue growth that you are seeing is led by their biosimilar business and the generics. So, generics was the highlighting factor when it comes to overall Biocon. But the surge in net profit that you are seeing, so net profit was up almost 155%. But this is because of the exceptional gain that the company has achieved. So, exceptional gain aided net profit, and the lower tax, if you see, lower tax also helped profit to grow this much. So tax was around 6% this quarter versus 48% last year. And a company has also approved fundraise of rupees 4,500 crore through issue of securities. Now this is for the Biocon biologics because of the lot of biosimilar launches that the company is expecting. Company did say that the sequentially, if you see, all segments reported growth, and the R&D contribution was 7% of the revenues, and Q4 has been the strongest quarter when it comes to generics, and company is expecting surge in global demand for insulin, and FY25 has been a year of consolidation, but on companies on the path of accelerating growth. So overall, here the con call was also good. They're expecting good launches, and Biocon biologics will actually be merged with Biocon. So overall, good set of numbers, good con call.
Okay, Biocon, good set of numbers. Talk about 1.5% down. Meanwhile, L&T, the construction giant, has posted profits higher than estimates thanks to more international orders. Stock is 3% up. All the domestic orders have remained weak. Anushi is breaking down the L&T numbers.
Well, it's a strong beat that we are looking for L&T for the fourth quarter now. If you look at all the three key metrics, which are there, that's order inflow growth, the EBITDA margins, as well as revenue, it was a beat in terms of where the FY25 guidance is concerned. While we did see in the fourth quarter that the revenues and margins were in line, net profit did beat estimates. Q4 order inflows, if we see, were led by higher international orders, while the domestic ordering has remained on the weaker side. Now, do note that revenue growth for FY25 beat a 15% of growth guidance, which is given with a 16% of a revenue growth that the company reported. If you talk about the order inflows for the year, they were up around 18%, exceeding the 10% of a growth guidance. So it's a big number, big jump that we are seeing in terms of where the order inflows were concerned, thanks to the international business. And in the last quarter, what we saw more orders coming from the Middle East side of the business. Also, what is interesting to watch is they've raised their FY26 core EBITDA margins to 8.5% as compared to 8.25% of guidance given last year. Just quickly walking through the Q4 numbers, we've seen about 11% of a growth in this quarter, while margins have seen about 24 basis points of an improvement to 11.02%, and net profit saw about 25% of a growth. Do note that this also included an exceptional gain of 475 crore in L&T special steels and heavy forgings. Now, talking about the order book positioning is an interesting one. Now, Q4 order inflows were up 25%. Again, a lot of orders coming from the Middle East side of the business with a ultra high order that we've seen this quarter. FY25 order book, if we see, that was up at 22% at 5.79 lakh crore. So even on a high base, we have seen higher orders coming for the business going forward. But what is interesting is the outlook forward on this high base also that we are seeing. Now, if we see order prospects pipeline, that has been raised to 19 lakh crore, which is up around 60% compared to the last year levels that we are looking at. Domestic constitutes about 7 lakh crore of this composition, while international constitutes about 12 lakh crore. Revenue expectations for next year is 15% growth is expected here, while core margins will be in the range of 8.5%. Now, what essentially the brokerages are saying, Investec on L&T, they've maintained buy and hike the target price to 4,155, citing decent results. And however, domestic was muted, but international has remained exceptionally strong. GS has remained neutral on the company. This did see that Q4 was a solid order inflow, while FY26 prospects also shows good visibility going forward. But macro uncertainty and increasing international mix is something that has kept the rating to neutral, and Bernstein seen has also maintained an outperform rating with a target price of 3,922, citing that FY25 was the first time that the company has beaten guidance across all metrics that it has seen. So this is the overall picture that we are looking for. L&T, a strong quarter for the business and a strong commentary for FY26.
Right. Anushi, stay with us. Strong commentary with regards to FY26 as well. Anything that you can give us in terms of the defense book, the defense business, the way the order book has panned out, and any benefits that you're seeing taking into consideration the Indo-Pak situation right now from what L&T would be supplying to them?
Right. Hiral, while in the conference call, this was highlighted on the recent tensions that we've seen in India, Pakistan, the country did, the management did say that for now it is too early to comment on how the orders would pan out, and they have refrained to give any sort of commentary based on that. But also on the overall, if we see the increase in the defense spending that we've seen from the Europe side also, they did see that there would be higher order inflows coming out. But so for now, the outlook for the defense segment remains uncertain. So that is something that we should be watching out for. The commentary was more towards the infrastructure side that they were bullish on rather. So L&T did not comment much on the defense side of the business. So that is something that we should keep in focus.
Okay. Thank you for that. L&T in focus. So is Bharat Forge. I mean, the numbers by itself were not great. It was a bit of a muted fourth quarter earnings. Puneet is joining us with more, but the stock today is up not because of its numbers, Puneet, it's because of its defense play. Let's focus on that.
Well, definitely, thanks for that, Tamanna. Definitely the defense play is something that, driving the stock up today, because largely nothing too much in results. In terms of defense, they mentioned that they've got order win momentum for defense has been led by, the artillery guns segment for the company, as well as the new ATAGS order. 3,700 crores what they've accrued over the last couple of quarters in some of domestic artillery guns, and that could see some positive momentum going forward as well. Apart from that, the executed order book is now 9,400 crores, and largely 70% of that is defense, and hence that move that we are seeing on Bharat Forge today. But apart from that, there's not so much to write home today. There's three key points that you need to know. The first one is, of course, that they're expecting the passenger vehicle business growth to largely be versus industry, versus which was outperforming last year. So that business has slowed down. The other key aspect is that they did not provide any kind of outlook for exports in FY26, and that's largely because of geopolitical tensions. And they've also mentioned that most brokerages coming out today and cutting EPS estimates by roughly 6 to 8%, but largely saying that because the stock has corrected so much over the last, it's down 12% on a year-to-date basis, but even the last year has not moved as much. They are mentioning that the defense business gives near-term visibility, but the longer-term focus as well as projections might be difficult. But the defense business is definitely giving a lot of impetus in terms of growth over the next couple of quarters.
Okay. Thank you for that. We'll get that interview with Amit Kalyani up shortly. And though it didn't focus on the defense angle, they can't really talk about it, to be honest. It'll be interesting to hear what he has to say. Now, some relief on the FMCG front as Britannia's fourth quarter numbers actually ended up beating estimates. Stock is also up in the green. Mahima tells us why Britannia seems to have fared better than their peers.
So, as you rightly mentioned, the numbers have clearly beaten estimates for Britannia. In terms of overall Q4 EBITDA, that was a beat on the back of lower employee cost as well. In terms of revenue, it was up 9%, net profit was up 4%, EBITDA improved by 2.3%, and margins at 18.2%, which were expected at 17%. So a big surprise there. In terms of where actually the growth came on, it was a value-led growth. Value grew around 9% for the counter. They have taken strategic price hikes, and this is the second quarter for Britannia where they have taken price hikes. They've also saved cost by around 3% and overall in terms of what brokerages are penciling in, Macquarie has maintained an underperform with a target price of 4,600. They believe underlying Q4 volume growth stood at around 8%. So while volume growth was 8%, value growth was around 9%. Although still volume growth of 8% is way better than what FMCG companies have already posted their volume growths in terms of their numbers. Overall, Macquarie awaits clarity on EBITDA margin profile. Their con call is set on Monday. That's when we'll get more clarity. And lastly, Macquarie says that input costs have seen healthy corrections in the last few months, and that poses a slight upside in terms of uptick in their profitability as well as margins going ahead as well. So this is the overall view as to how the quarter has panned out for Britannia.
Right, so that's with regards to where Britannia goes. Stock seeing gains of around 0.8%, and this is going to be a sector which is going to be crucial as well, taking into consideration the last two trading sessions where it did see some bit of pressure, but again, that was on the back of the Indo-Pak escalation. Today, some green shoots that are emerging as well. But let's also welcome in Vinod Karki, Senior VP Equity Research at ICICI Securities. Vinod, good morning and welcome to the show, and a pleasure always to speak to you at NDTV Profit. Vinod, how are you seeing the current geopolitical situation evolve? In turn, the kind of impact it could have in terms of markets, because there is some bit of resilience which is still there. You have the FIs which are still coming in. The DIIs have continued to remain strong as well. What's the mood check looking like?
Yeah, good morning and thanks for having me on the show. So if you just roll back, I mean, last 2 months, if you take the 2nd May as the reference point, 2 months rolling returns on in terms of USD returns for FIIs. This is probably the highest returns in the post-COVID period, almost 14% returns for FIIs on USD terms. And out of that, almost 3% odd is coming from the INR appreciation. I think from just a short-term returns perspective, the market needs to kind of cool off a bit, given the sharp rally. And the global rise in global geopolitical issues that we have been seeing gives a perfect, what you should say, a reason for the market to get into some kind of a consolidation phase after this sharp rise. I guess that's how we're looking, because even on the valuation front, the Nifty P, which had gone to reasonable levels in the recent past, has now nudged above 20 times, 20.4 to be precise. So I think we are in now for a time where the market should consolidate after this sharp rise. That's how I look at it.
Vinod, good morning. Tamanna here, and always great to speak with you. I'm wondering what are the opportunities that we're seeing here, because when you look at the Indian markets, these kind of opportunities are far and few in between. And you see that, uptick coming in fairly quickly. At this point, would you be more cautious? Would you be sitting on some cash? Or would you look at dips like we're seeing today, or perhaps in the next few days before things settle in, as opportunities to build positions?
Well, see, there are 2-3 things. One, from a opportunities growth, where if you see the results so far, we went into this result season with fairly low expectations, and that's showing up. As per our analysis, the number of beats have been higher as compared to the misses. And within the companies which have shown higher than nominal GDP growth and which have kind of beaten estimates, most of them are from the cyclical sectors, while the lag, or in terms of growth as well as in terms of downgrades, we have seen more from the defensive sectors like IT and FMCG. So I think just from a growth perspective, if due to this geopolitical crisis, some of these companies which are posting good results on the industrial space, commodities, even financials, I think that will be a good opportunity, because growth is not disappointing on that front. And if this bout of geopolitical risk results in lower prices, I think that should be a good opportunity. But having said that, as I said, the FIIs have been loading up over the last several days. We have been seeing that, and I mean, 14% on a 2-3 month period in USD terms. I think that's a fairly good return in a short period of time. I think market should be in a phase of consolidation for some time before moving on to the next level.
You know, you mentioned, Vinod, that corporate results have actually come in better than expected. That has been heartening. In terms of the kind of review that we are seeing of corporate results, what are the sectors that you think have surprised on the upside?
Yeah, so as I said, it is largely the cyclicals, be it some metals, cement, and industrials, infrastructure. Even the large banks didn't disappoint too much. So I think most of the some auto companies, this is where the results have been heartening. The growth is above nominal GDP. So energy companies, OMCs, power, and those kind of things. And where the disappointments and the growth itself, growth is subpar. The economy is growing at 10-11% nominal GDP, and if something grows at 4, 5, 6% around that, it's obviously subpar. And on top of that, you're getting downgrades to those growth itself. We're seeing that in IT and some consumer large FMCG companies where growth is struggling. So I think the pockets are very clear where growth is better off, basically.
So, Vinod, which are the sectors you would say is the time right to avoid? And 2, if you're holding any position to exit?
Well, I think where the valuations are high and growth is disappointing, like we see in some consumer companies, where valuations are pretty high, 60, 70 P and those kind of things, and growth is coming out to be pretty low, and outlook is not also improving. I think that's the space one should be getting lighter, because there are pockets where the growth is improving. And valuations are reasonable. I wouldn't say valuations are very cheap anywhere overall, except for, I guess, there are only 2 pockets, I think, where valuations remain quite reasonable. One is the large financial space, banks and all, and to some extent, some of the commodity companies where valuations are reasonable.
In terms, Vinod, of the core staples, banking, financials, how would you look at those right now, considering on balance the numbers have not been half bad? Would you look at a sort of a resurgence now in PSU banks, or you'd stick with the tried and tested private banks?
Well, I think, as long as the performance continues, and I don't think anything is extremely expensive in this space, overall financials. With some ebb and flow, they should continue to do well, I guess. And NPA cycle is still not at a point where things are going to go bad from here onwards significantly. So I think it will depend on each company, and we have been seeing that there have been some differences in performance of companies, even within PSUs or this private, and that way overall. But I think overall financials are looking good, in terms of valuations to growth angle. Obviously, there is a concern on the NIM compression because of the rate cycle. But with the RBI going into accommodative, mode, which is obviously to say that it will be more concerned on, accelerating growth from here on. So I think one should be, positive on the growth aspects also going forward. Right now, there are some concerns on growth and NIM and all. But I think as the year progresses and we see a lot of these effects of these stimuluses that were done earlier, one was the whole liquidity infusion, and then the rate cuts, and then the tax effects. Tax stimulus will start affecting this year, and next year we'll have the pay commission following up with on top of that. Plus the post-election capex should be good, both from the private and the government going ahead. So I think things are looking reasonably good overall for credit growth. And the accommodative stance of the RBI will ensure that rates are lower and liquidity is ample.
So that's with regards to, what you should be doing in terms of the action from a market perspective. But thank you so much for joining us on the show, Vinod, and sharing your views.
Thank you.
Let's shift focus to one stock, Bharat Forge, that is up nearly 2% in trade today. And Tamanna, it's the defense pack, if you think, has been really on a seesaw ride. 2025 as a year started off slightly on a weak note, but then it's taken off. Last couple of trading sessions as well, if you see the defense pack, the stocks didn't really move that much. There was a week where we saw some smart moves.
Yeah.
And today, they're back in action.
They're back in action for obvious reasons, because we're in the middle of a regional conflict and the Bharat Forge stock up over 5%. But it's also back in action because this is the first big test of the Make in India policy on defense.
Correct.
India has traditionally been an importer of all defense requirements. This was the first test of Make in India, and it's come out with flying colors. So, which is why this is also a thumbs up to the capability of Indian defense companies. Now, we're talking about Bharat Forge. There is, a lot of buzz on it. Its Q4 numbers were out as well. Q4 numbers were so-so, but it's interesting to listen to this conversation my colleague had with Amit Kalyani of Bharat Forge on the numbers.
I just want to start off first, in this particular quarter, we were expecting that the standalone business, will have roughly flattish growth, but it's maintained its EBITDA margin in a difficult time. Where there has been a lot of speculations across the globe. So just wanted to start off, if you can just give us a few highlights for this particular quarter, both on standalone as well as the consolidated, and then we'll get into the segmental performance.
Yeah, so I think we had a fairly decent performance in quarter 4. We had a total revenue of 2,163 crores, which was slightly higher than last quarter. EBITDA grew quite nicely and margins grew by about 100 basis points to 29.1%. Our PBT was about 494 crores for the quarter. On a full year basis, standalone was about 8,800 crores with the EBITDA of 2,524 crores with a margin of about 28.5%. Again, 100 basis point expansion. Our balance sheet remains strong. We have cash net of loans of almost 1,330 crores. Our ROC was about 18.1%. At a consolidated level, the Q4 revenue was 3,853. This is a little lower than last year because some of the defense orders are lumpy and they happen, it's not every quarter always the same amount. But EBITDA moved higher, margin expansion of about 170 basis points. The consolidated revenue was slightly lower than last year by about 3.5% at about 15,123 crores. But margins increased by about 180 basis points to reach 18.2%. We've secured new business during this year of almost 7,000 crores across all our different business areas. Defense was 5,000 crores and between BFL and JSA was about 2,000 crores. And our total capex for this year was about 750 crores. Our overseas subsidiaries, the EU Aluminium has started stabilizing but given the unfortunate European situation, utilization is not yet at high levels. Our US operations are in the black for Q4 with a recording of profit, a positive EBITDA of 4 crores. And we expect that this year we will have a significantly improved performance. We are already at positive numbers in EBITDA, and we hope that this will translate into positive numbers in PBT as well in the US market. In Europe, we recorded an EBITDA of about 96 crores for the year. Our US operations have substantially reduced their EBITDA loss, and utilization in the US is at about 70%. And we expect that with this whole Make in America kind of situation, we see a lot of potential going forward. We continue work on cost reduction and restructuring in Europe, and this should show results in the next 3 to 4 months.
Sorry, Mr. Kalyani, if I can just interrupt you and apologize for that. Just want to take forward the export market point with you. Specifically for Europe, what's the current scenario on the ground? Because while for this year you mentioned that the EBITDA margins were roughly 2.5%, they're slightly lower than last year. So on the ground, what's currently happening with demand? Because we've seen a renewed focus on defense as well in Europe for protecting themselves. So what could we expect from Europe and FY26 if you can quantify a little bit?
Right now there's a lot of talk about make defense equipment and systems in Europe. They have to rebuild the entire manufacturing ecosystem for defense in a large way. We see a lot of potential in this. Forgings are an integral part of most defense equipment. So we are definitely going to look at whether we can play a part in this. But right now, if you look at our European subsidiaries, they're largely focused on automotive and commercial vehicle. And both those areas are under some amount of pressure, but they aren't collapsed or anything like that. So right now there's a lot of uncertainty because of the continuation.
All right, that was Amit Kalyani. But just to get the latest of what's happening in ground action, here's Shiv Arur.
Things are very tense right now. Things are extremely volatile right now. Remember, Pakistan's attempts twice over 48 hours to conduct attacks directly on military establishments, here in Srinagar and in different parts of India, Jammu, Ludhiana, Pathankot, Kapurthala, Chandigarh and elsewhere where we've been hearing air raid sirens today, suggests that Pakistan cannot be trusted to wind things down and de-escalate, even though India has repeatedly given them that option diplomatically. This is a country that clearly needs some kind of a face saver, and therefore India is completely on high alert. There's no question of letting the guard down. A worst case scenario of another escalation is always factored into India's every move. Pakistan has already indicated that it wants to do that because overnight as well, after a bad drubbing in the air thanks to India's air defense systems, they've been continuing to send in drones according to the Indian Army's official statement this morning. The Chaukibal, where I reported from last evening, saw heavy shelling overnight. So have Uri and Kupwara. So you can expect that things are going to remain hot today as well. There may be a possibility of things de-escalating, but war planners, military commanders, the political leadership are expecting things, always plan for the worst in this kind of a scenario. And that's what's really going to happen right now. Rajnath Singh, the defense minister, has of course met the three chiefs and the chief of defense staff. The prime minister is in touch with all his, security establishment chiefs on a real-time, hour-to-hour basis, because this is an evolving scenario. And as we know, the prime minister, is fully plugged into every little decision that is being made at this point of time beyond the operational freedom given to the armed forces. So, expect an escalation, and let's just hope that things will actually calm down.
That's the latest coming in. We will, of course, be waiting for the official word from the Armed Forces representatives and the Ministry of External Affairs on what exactly has happened and what we expect for the next few hours.
Absolutely. And I think from what Shiv is mentioning as well, and from the guest we spoke to, the next 48 hours are absolutely crucial with regards to the escalations and the tensions that unfold. But completely out of time, but it's a wrap on this edition of India Market Open. From Tamanna, myself and the team that put the show together, thanks for watching, and you'll keep getting live updates with regards to Operation Sindoor and what's next. For any of your queries in terms of your stocks, please log on to Ask Profit, and there you'll be getting all your queries answered. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो डिलिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. we also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है.
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया, घर आजा भाई. दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के. दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया. इसके महंगे कपड़ों पे थोड़ा वो छलक गया. तो
Was it tough initially to get people to buy into the story?
You know, I come from actually a Dhania vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था.
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते.
मर जाएंगे बट नहीं हटेंगे.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vachajani, and we'll take you through the next 1 hour of trade. If you're tuning in for the first time today on NDTV Profit, our thoughts and prayers, as always, with everybody that is on the border and our armed forces that are ensuring that activity like what we're doing today, and in fact the markets, go on undisturbed. So our thanks and prayers with them always. We are opening the phone lines to you, and as we normally do, we would request that you maintain a little bit of sensitivity when you ask your questions. So do refrain from making any statements outside of questions that you might have about stocks that you are either invested in or intend to invest in. To that end, let's take a look at where the markets are right now, and understandably there's quite a bit of chop and churn, and you have cuts of about 1% or so for the benchmark Nifty 50, but there are pockets of strength. We'll get to that in just a bit. The Nifty Bank trading with cuts of about 1% as well. The broader markets have come off the low point of the day. The mid-cap index trading with cuts of about 1% or so, and the small-cap index down about 1.8%. Understandably, the market breadth is tilted in favor of the declines, and this is likely on account of the fact that people are unwilling to hold on to positions ahead of the weekend in a situation that is in a state of uncertainty and flux. There's a lot that is happening at the diplomatic level and at the military defense level, and so a lot of people are waiting and watching on the sidelines. This show, of course, is supposed to give you understanding on how you should position yourself. And of course, the statement that has come through from a lot of market veterans is that this is not the moment to panic. If you've got long-term portfolios, continue to hold, because the fundamentals of the Indian economy and of corporate India remain unchanged. The pockets of strength that I was talking about, understandably, are the defense pack. If we can pull up the sectoral heat map, just to give you a sense of what is moving right now, the defense pack is up and about 2.4% higher. You also have PSU banks that are up and about 1/3% higher, and consumer durables doing well. What is not doing well is the realty pack, which has been under a little bit of pressure over the course of the last few trading sessions. It's down about 3.5% or thereabouts. You have the Nifty Finance Index that's down about 1.4%, and oil and gas that is down about 1% or so. In fact, let's pull up the realty index and take you through
what has happened over the past week or so. If we can do that, just pull up the line chart for the last week and you will get a sense of how this pack as a whole has underperformed. It's down about 7.5% or thereabouts over the course of the week, and most of that taking place in trade today. I believe we've got Jatin Gedia who's joined us already. Jatin, very good morning to you, and thanks so much for joining us. Sameer Dalal will join us as well in just a short while. We want to understand from you just at the start, before we get into any individual stocks, how would you position yourself ahead of this weekend amidst this uncertainty, and how would you trade this?
First of all, what we believe is that the market has now entered into a consolidation phase or a correction phase, I can say. This is on the back of 24,500, 24,400 not being decisively able to reach above that resistance. So we believe that now the Nifty is likely to trade with a negative bias till the levels of 23,500 on the downside. 23,500 coincides with the 40-week average and also the 38.2% retracement level. So we believe that the rally which started from around 21,740 odd levels, now we are into the retracement of that rally. So we are only seeing a retracement. This is not the start of a fresh leg of down move. It is only a retracement of the rally, and once we are close to this 23,500, we are expecting the next leg of up move to start. So yes, there is some amount of correction or consolidation that is likely during the next couple of weeks, but overall we still believe that around 23,500 we are likely to witness the resumption of the next leg of the up move. So yes, from current levels, yes, there is a downside possible, but we are expecting it to hold around 23,500.
23,500 is the support that Jatin is observing on the charts right now in terms of the downtick that is expected. For viewers who are tuning in right now, you can either call us or WhatsApp us on the numbers that are flashing on your screen. The number that's flashing in the lower band is the number that you can use to also call us and ask us all your queries. All right, the first question of the day is from Rahul, who is writing in from Panchkula, Haryana. He's holding IDFC shares, bought 1,225 in quantity at 73 a piece. Wants to know whether he should continue to hold from a longer term perspective or exit now. Sameer, a very good morning to you. What do you think is the outlook for IDFC? Should he continue to hold?
Good morning, Mahima. So fundamentally, yes, it is one of my top picks in the banking space, in the big cap banking space. So I would say continue to hold on to it. I think it has great long-term prospects. It's gone through a bit of pain because of the problems they've had with the microfinance and one loan asset on a toll asset. I think they've taken the provisions that are required, and now anything that will happen will be right backs. So as things go forward and the company continues to grow, the deposit base is growing at a very good pace. We believe the loans could comfortably grow at 20+%. Plus the NIMs will increase because they have high cost borrowings from the erstwhile IDFC, which will get replaced with deposits. So as that happens, NIMs increase, the profitability will also increase, the operating leverage will play out, given the fact that now the capex going in will be lower. So I say definitely hold on. But one thing I would like to add, Mahima, as a disclaimer before we start this show and we talk about individual stocks, that all bets go off the table if something escalates between the India-Pakistan wars. We're talking about purely fundamentals, but the fundamentals can change very, very fast if something were to go terribly wrong.
We'll have to react as and when that does come through. A lot of the experts that have been on this channel so far, and these are former army officers, have indicated that the next 48 hours are going to be crucial to watch, both from a military standpoint as well as from a diplomatic standpoint. And the Indian administration has very clearly stated repeatedly that if there is a de-escalation from the Pakistan side, then that will be matched by the Indian forces, and the opposite is also true. So we'll watch and give you those details as and when they come through. The next question coming through is from Zahid, who's asking about BHEL. which he's acquired at a price of 329. He's got nearly 6,000 shares is what he's pointed out. And Jatin, on the charts, how does it look? Would you hold on to this? Because he's undergoing quite a bit of a loss right now.
I think the investor should exit his positions because the rally that we saw in the month of March, April has hit the 40-week exponential moving average resistance, and thereafter we are witnessing a sharp decline. So there is weakness. It wasn't unable to cross above that 225 to 30 mark, which was the previous swing high and the resistance. So the structure still remains negative, or we can say weak. On the downside, we are expecting the stock to slip towards 192 to 186 odd levels. So I think it's better to exit at this point of time from BHEL. So exit is the suggestion.
Okay. Exit is a call on BHEL. We've got a first call of the day. Ramesh is calling us from Hyderabad. Good morning, Ramesh. How can we help you today?
Yeah, good morning. I have a Tejas network of quantity of 100.
Okay.
So I'm just looking for whether it's a time to average the stock or exit from the stock.
Ramesh, what's the holding period that you had in mind?
I can hold, but I wanted to average, looking for the average, but whether it is the time to enter or average at the time or exit from the stock.
Yeah, no, I am asking about the holding period because it will help me understand who to ask the question to. So is this a fundamental?
I can hold for 2 to 3 years.
Okay. All right. So Samir, based on the fundamentals, how do you see Tejas Network? If I remember correctly, the numbers were not particularly good in the fourth quarter, and the share price has taken a bit of a beating post that. What do you make of the stock? Would you hold? Would you average?
So Alex, we don't have coverage on this one, unfortunately. So can you take a view?
I can take a technical view. So, but Jatin, on the technicals, slightly longer term, if you're saying 2 to 3 years, would you average at this price?
No, I would wait for the price to slip towards 550 odd levels. So technically, if I see a weekly time frame chart, because the investor has a holding period of 2 to 3 years, I think there is a decent amount of downside that I can see on the higher time frame charts. The weekly Bollinger Band is placed around 550. So that is a crucial long-term support around which we can consider averaging. Overall, the structure is still negative at this point of time. Rally fizzled out at the 20-week average. So that is again not a bullish sign for the stock in the very near short term. So don't average at current levels. 550 is the level around which we can consider averaging.
Keep in mind those levels for Tejas Network. Stock has been under a little bit of pressure. Now, we have promised to give you updates over the course of the day, and we've been bringing you live updates of the Operation Sindoor. Now, here's what has come through with regard to what took place last night. There was an attempt by Pakistan to attack several military bases in Jammu as well as in parts of Punjab, several other places as well, and that was countered and neutralized. And this is on account of the air defense system, and part of that, of course, is the Sudarshan Chakra, which is the S-400 air defense system. Shiv Arur joining us to tell you what this means and how this came into play. Shiv, what are you picking up?
What we saw yesterday captured on civilian mobile phones, flooding the internet after 8 p.m. yesterday, starting with airspace over Jammu, then Pathankot and various other places, was basically a symphony of India's integrated air defense system kicking into action and intercepting, a multiplicity of incoming Pakistani projectiles, including loitering munitions, attack drones, possibly some short-range missiles as well. This was a very, very complicated operational scenario where India's integrated air defense system, which consists of the S-400 principally, but many other systems, including the Akash, Indian Akash system, the Spider system from Israel, and a few others, all of it integrated using Indian know-how and technology, working incredibly in unison. These are images that people have never seen before, but at the heart of India's air defense shield, and perhaps our most formidable air defense weapon right now, is of course the S-400 that was ordered some years ago. It was finally delivered during the COVID pandemic. Yesterday was the first time we've seen the S-400 being used in anger. In anger is of course a phrase to describe being used in an operational live war-like scenario. Now we don't know which of the videos that came out actually show S-400s intercepting, but we know somewhere out there in the darkness those missiles were swooping up to intercept incoming enemy projectiles to protect so many Indian cities in the north and the northwest. And the S-400 is an incredible piece of weaponry. It's an air defense system that is acknowledged by the acknowledged world's biggest arms producer, the United States, as a formidable air defense weapon. The presence of the S-400 on the ground gives even NATO countries and the United States pause, makes them change their plans, flight paths, things like that. The S-400 has a capacity to, engage incoming projectiles, many of them at the same time using its highly advanced tracking radar. It can conduct interceptions out to ranges of anywhere between 40 and 400 kilometers. A very intelligent group of systems and computers, live track in real time incoming targets and then intelligently assign the correct missile, the correct location to actually fire at and intercept and destroy in the air those incoming targets. So it's a mind-bogglingly complicated symphony of moving parts, electronics, sensors, and then finally the actual kinetic missile that goes up there and intercepts those things. It's like, shooting a bullet with a bullet, really. And that's really what happened yesterday. Think of it as, thousands of bullets or maybe hundreds of bullets coming at you and a group of systems creating a shield across the country, killing each one of those bullets individually.
Yeah, Shiv, thanks so much for that imagery, and it paints quite the picture. In fact, we don't have to paint a picture for you. The visuals that were being played out on screen will tell you exactly how this air defense system was activated overnight, and it's kept families in India safe. We spoke with retired Lieutenant General S.L. Narasimhan to try and explain how exactly India's air defense system works. And what he said is that it functions in a form of layers. Listen.
There is no single system that does air defense. Air defense of a country is the responsibility of the Indian Air Force. But you need to understand that there is an integrated air defense grid that has been established. It will have, in layers, many weapon systems that will be deployed. Like, for example, at the forward edge, you will have the handheld ground-to-air missiles, man-pairs as you call it, that will get deployed. Beyond that, some increased range weapons like Akash missiles, etc., will get deployed. And beyond that, you will find the S-400 variety of weapons that will get deployed, which has got a range of 400 kilometers, which can cover the entire Pakistan's depth. So it is a layered kind of air defense. It is a grid patterned air defense which will cover the entire area. And there is a system by which the Air Force monitors this. It's a electronic and AI-induced system, and that is very effective. And that is the reason you find none of the drones, none of the missiles that was launched by the Pakistanis have come into play. So this is the way that you need to understand the air defense. In addition to that, you will have the Air Force, which is already deployed. That will take off in case further, if they locate any of the Pakistan Air Force coming into play. So this is a graded system. It's a grid system, which will actually cover the entire area and the region. I'm simply put, I've not gone into the technical details. I've just given you a general gist of how it is done.
That's a perfect explanation as to how the entire system works and to get our viewers a perspective as to what's happening exactly. All right, we have our next caller, Chandrasekhar from Hyderabad is calling in. Chandrasekhar, a very good morning to you. I believe you have a question on BEL.
Yes, sir.
Yeah, go ahead. Ask your query.
Yes, the query regarding BEL is that I'm having 25,000 of profit in the BEL stock. Should I book profits right now, or should I wait some more time as there is a war happening with India on price? So should I wait for some more time and book profits, or should I profit right now? Book profits right now?
Got it.
That's my query.
Okay, got your question, Chandrasekhar. I'll take this up with Samir quickly. Samir, with everything that's happening, of course, we're seeing Nifty Defense on the back. It's rising right now. But your sense as to what should one do with defense counters right now?
There makes no sense selling them away right away. I mean, look, we're not denying the fact that valuations across the board in the defense space are expensive. But given that we are where we are at this juncture, demand for products is going to continually increase. I'm not sure. It's difficult for me to say how much profit the government would allow these companies to make in a situation where you go for war. So that remains the only risk. But barring which, over time now, one thing is very clear. Companies that are in the defense space are going to see huge orders coming over the next many years, which will allow them to grow their sales, get the operating leverage. So valuations probably could stay higher for longer, even though we find them really high. So given he's bought it at a very attractive price, I say he can choose to hold on. If you ask me, would I buy at this level? Probably not. So I'd wait for corrections to buy, but BEL, given his value of purchase, hold on to it.
All right. So that's the view on the defense pack. Samir, thanks so much for that. We've got a view on the long term that is being sought by Ishan from New Delhi about CG Power, which he says that he's acquired at a price of 20 rupees per share, and he's got a quantity of 6,000 shares. So it's quite a considerable gain that he's sitting on. If you've acquired at these levels, Samir, would you take money off the table?
Oh, definitely. Actually, I would have taken money off the table some time back. Look, this turnaround has been a great story after Tube Investments took them over. That is the Murugappa Group. But I think the valuations have moved far ahead of what the fundamentals justify. We don't deny the fact that the order flow has been decent. They've been able to turn their operations, become profitable and all of those things. But at the kind of value you're paying for a company, and given the fact that now the utilizations have moved up, the same kind of growth cannot be expected. And if that is the case, you're not going to get the same kind of momentum in the stock price either. So I would take the profits, some of it at least, off the table right away. Look to invest in other companies where valuations and growth are more attractive. Maybe in the renewable energy space, given that it's part of the energy kind of thing he wants, he can look at something in the renewable energy space where the growth can be a multi-fold over the next maybe 4 or 5 years.
All right, so that's the view with regards to where CG Power stands. Our next caller, Teja, is calling in from Hyderabad. Teja, very good morning to you. How can we help you?
Hi, good morning. Thanks for taking my call again. I'm holding 3,000 shares of Electra at an average price of 977 rupees.
Okay.
My view is for very long term, like coming 5 to 10 years from now. The factory is located in Hyderabad and it has ingeniously grown in Hyderabad. I've seen the factory from outside many times while I was going to my farm.
Okay.
I would want to buy another 2,000 shares or so in the coming fall. Can you please tell me the entry price for the next leg of?
Okay, got your point, Teja, and also congratulations because you've entered at the right levels and sitting on a profit of over 3 lakh odd rupees. Jatin, I'll quickly come to you in terms of what charts are indicating for Electra. What is the right time to enter?
See, I believe in the case of Electra, the crucial support now comes in at 990 to 970 odd levels. So if he wants to average or even add to his existing positions, then 970, 990 is the level around which he can consider doing averaging or even buying more.
All right, so that's the view on Electra Green. It's down about 19% or so over the last 3 months. Let's take another caller. We've got Mohan calling us from Warangal. Mohan, very good morning to you. How can we help you today?
Mr. Alex, very good morning.
Good morning, sir.
Really, I am very glad to talk to you.
My pleasure.
Okay, sir. Thank you. I possess already 200 shares of Anantaraj Limited.
Okay.
Now I want to add some more shares. So please tell me at what price should I enter?
Okay. Mohan, can you give me a little bit of clarity on this? When you bought it, what was the thinking? Did you buy it based on the fundamentals?
Yeah.
For the long term?
Long term, for 1 year.
For 1 year. Okay. Okay, so then from that perspective, let me go to Jatin on this one. Jatin, 605 is the buy price. The stock under a little bit of pressure today, down close to 5%. Would you deploy at this point? Would you hold on? What levels would you watch out for?
In the case of Anantraj, 385 to 380 is the level around which we have the next cluster of support kicking in. So that's a decent amount of downside from current levels. So I think the investor needs to wait for the levels of 380 on the downside. Even at that support level, one needs to further revisit the stock, whether it's holding on to that support or no. So 380 as of now is a support cluster, but we need to check at that point of time whether that support is holding or not. So at this point of time, don't average 380. You should consider, but only if there is a trend reversal or we see a bullish pattern developing around that support levels.
Okay, so that's the way with regards to Anantraj. Jatin, I believe we'll have to let you go at that. Thank you so much for joining us. With that, it's time for a very short break, but we'll be right back answering all your queries on the other side. So stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
Have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया घर आजा भाई, दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। तो इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
You know, I come from actually a Baniya vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch. I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियां भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hi, welcome back. You're watching Ask Profit. It's time now to deviate a little bit from the questions for just a bit. We've got an earnings conversation to take you through, and we're talking about GHCL. Just to give you the snapshot of the financials very quickly before we get on the managing director, the revenues dropped by about 5% or thereabouts, and the net profit, because of an expansion in the EBITDA margins, has come in 20% higher at 150 crore rupees. We're joined by Mr. Ariz Jalan, who is the managing director of the company. Sir, thanks so much for taking the time. Pleasure speaking with you, and thanks for speaking to NDTV Profit. Let me start by asking about that margin expansion that you've experienced in the quarter. What led to that? And that seemingly is what has led to the improvement on the profitability.
Good morning, Alex. As you rightly said, this year or this quarter was definitely an experience to us. And this, in spite of a global challenging market scenario and surplus material available in the market, we have been able to perform better, primarily because of our operational excellence and the innovation which we have been able to do in the plant. If you look at year as a whole also, Alex, you will see that overall our revenue has been dipped by 5%, but in spite of that, our EBITDA has grown to 966 crore, and that is also primarily because of the innovation and the operational excellence which we have been able to achieve.
Hi, Mr. Jalan, this is Varsha this side. On the margins fronts though, where you see that margins going forward, what is the sustainable EBITDA margin that you're expecting for FY26, sir?
See, what's up? Good morning. What's up? If you look at 25-26, overall globally, the markets are going to be soft. The prices looks to be that either in the range bound or slightly maybe on the lower side. And based on the operational excellence which we have achieved, I think probably we will be in a range bound in the 25-26 also.
Because of the pricing pressure that you are talking about, for FY26, if you can give us what kind of growth are you expecting over FY25 when it comes to top line?
See, Varsha, there are two things which we have new project which we are coming in the stream in 25-26 in the later part of 25-26. One is the vacuum salt and another is the bromine project that will be coming in third and quarter of 25-26, and that will lead to our revenue growth in 25-26.
Give us an outlook when it comes to soda ash pricing in the coming year. Any sense in terms of how the pricing trend could be?
See, what's up? In 25-26, definitely, as I said, overall the market is going to be soft. But in a medium to long term, we are bullish on this business. And if you look at the last many years of the history, the soda ash prices has always been remunerative to the business. And because of that only, we are going for a new project in the Gujarat, and this will be in next 3 years we will be having that project. So that will also add to our revenue growth and the overall profitability of the company.
Mr. Jalan, can you take us through what the capex is for that project and in terms of capacity utilization overall, not just for soda ash? But I'm just wondering, considering that the demand picture, as you've pointed out, is a little soft right now, though you see it improving in the medium term. What is utilization right now and how do you see that moving in FY26?
See, Alex, our plant utilizations are more than 95%. And going forward also, the utilization will remain as it is. Only the price pressure may be there in 25-26. In terms of the new project which is coming in only after 3 years, and I just wanted to highlight, Alex, here is that the new green, the solar investment which is coming in India, that is bringing a lot of opportunity for the soda ash. And you can see approximately around 100,000 tons in 26-27, the new solar plant investments which will bring soda ash demand growth. So that will definitely help this capacity get absorbed going forward.
Got it. And also on the bromine and salt business that you're going into, how is work going because you've acquired land, and how are you planning when it comes to tapping the customers in that space?
So, Varsha, right now what we are going is that we are going for 2 projects which are on the existing location. One is our soda ash plant where we are putting up this vacuum salt project which is around 200,000 tons of the plant. And the bromine plant also in our existing salt feed what we have. This will get commissioned in September, October this year. And the new plant which we are planning to do in the Kutch area, that will take 3 to 4 years of time. And there is a good demand growth in bromine business domestically as well as the overseas. So we don't see any challenge in terms of the supply or the customer's demand point of view.
Mr. Jalan, just lastly, can you give us a sense on utilization of the cash that you have? Because as I understand, you have a reasonable amount of cash in your books. Do you see opportunities for inorganic expansion?
See, at this point of time, like I said, we have a capital commitment to the new Greenfield project, which is approximately around 4,000 crore, 4,200 crores. We have approximately around 1,100 crores cash into the balance sheet. And going forward, probably this cash will get utilized in our new Greenfield project in Kutch.
Understood. All right. Mr. Jalan, pleasure speaking with you as always. Thank you so much for taking the time and look forward to the next chat as well.
Thank you, Alex. Thank you.
All right. There you go. So that's interesting updates coming through and margin improvement, seeing the profitability improve for this company. And they've also spoken about the expansion plans going forward. Stock is down about 2.3% or thereabouts, but that's the texture of the market as well. Varsha, thanks so much for joining us on this conversation as well. Joining us on this side is Amardev Singh, who's a Senior Vice President Research at Angel One. Thanks so much for joining in. And Sameer, thanks so much for taking the time and waiting with us. The next question we're taking is on Asian Paints. It's in focus on account of numbers. We've got Ashwin from Guwahati who's asking about this. He's bought at levels of 2,410 rupees about 6 months back. What should he do right now? Sameer, as much as certain people who love this stock in the space have wanted to deny it, there is an undeniable impact of competition in this space. Margins are contracting, not just for Asian Paints, but for other players as well. How would you deal with a holding of Asian Paints though?
Okay, so rightfully so, Alex, you already said competition is definitely creating some problems with the margins, and that can be very clearly seen in the results. But I think there's not only competition, but there's also to do with the fact that we've seen a little bit of slowdown in consumption in India over the past year, be it rural or be it urban. And that too kind of has a negative impact. But the market and the opportunity for paints is again still very large. So we believe there's enough space for JSW and also Birla, that is Birla Opus as the Grasim group, to compete in the space. Yes, margins will probably not be as favorable as they were back in the day because competition is there and they want to eat into some market share. So that remains one big risk. But luckily, your caller has bought it not at the high price of 3,600, but at 2,400, so which is not too far from the current price. And if he has a slightly long-term view, I believe the market, as it keeps growing, and Asian Paints at the end of the day has a very strong brand name, can do well. The problem is the valuations post these new normals, at least not new normals, but the new lower margins, I would say, are still expensive. The stock is still trading at about 50 times 1 year forward. So, there's always a risk that the stock can see a bit more of a time period correction or even a stock price correction. But if he has a three-year view, I think there is some money to be made. Ideally, if it comes closer to 2,000 levels, I would be a buyer in the stock. At this point, I would just say hold on.
That's the view with regards to Asian Paints. And I think apart from competition, as Sameer rightly mentioned, it's also the muted demand, which is not picking up at all. And plus, there's downtrading also playing its part in terms of the overall margin downtick as well. So that's with regards to where Asian Paints stands. Our next question. Can you find the question? I cannot find the question.
I got it. We've got Vishal Megamart that Angad wants to know about, and he's acquired this in the IPO, one lot. The stock is currently at 119 or thereabouts. For the long term, would you hold on to this? Oh, actually, no, he's speaking about 1 year. I'm not sure if you have enough data. Amar, would you say you can hold on to this?
Yeah, honestly, there's not much data, so really difficult to.
Okay, Sameer. Okay, fair point. I'll come to you very soon. Sorry to keep you waiting. Sameer, any view on Vishal Megamart?
Sorry, unfortunately, I don't have. We had a new listing and we've not tracked it.
Okay, we'll reserve that question, Angad, and we'll get you a view as and when we can. JSW Energy is the next stock that we want to talk about, and this is a question from Shubhra. She's asking for a short-term outlook on the stock. She's bought at a price of 502. And she's wondering what to do. Should she hold on? She's incurring a bit of a loss. Amar, what's the view?
See, if you look at JSW Energy, we've seen the stock in a downtrend because the stock did manage to witness some pullback from 440 levels towards 576 and the last week of March, and then again it has been down to 450 levels. So clearly, it's trying to form a bottom, but technically, if you ask me, the long-term trend on the monthly charts that continues to be negative. But since it's around close to support levels, there could be a temporary bounce back. So ideally, one can hold on to the position. 480 is a first level to watch out for. If that is taken out on the higher side, then you can expect the stock to rally towards 530, 550 levels. Whereas on the downside, the stock has got strong support coming around the 440 level. So ideally, one can hold on to the position as of now.
Hold on to the position is the view where technicals are concerned for JSW Energy. Our next question is from Gopinath, who wants a view on Vedanta. He's holding 80 shares at an average price of 466. He wants to know whether he can hold or sell. Amar, I'll quickly come to you again for this one. What's the view like where charts are concerned for Vedanta?
So if you look at Vedanta, what we are seeing here is that it's clearly in for consolidation. So there's a trend missing in the stock. The stock did rally and then again corrected currently around 400 odd levels. Seems to be forming some support around the 360, 370 zone, whereas on the upside, 420, 430 is a zone of resistance. So it's more of a trading play rather than any major trend that is visible technically on the charts.
Okay. All right. So that's a view on Vedanta. Murli is calling us from Bengaluru. Good morning, Murli. How can we help you today?
Very good morning. And only one little thing is convey our salutes to Indian Army on this occasion.
Yes. Thank you so much for that sentiment, Murli.
They are fighting for us. Number one. Number two, I have bought Bharat Bijli, a transformer manufacturer.
Yes.
At a price 100 shares at a rate of 2,896.
Yes.
And it has come down from its peak price for about 30-40%. And all the transformers, whether it is transformer, Voltamp or Trill or this, all are doing well.
Yes.
With the order book and they are going for huge capacity. Can I add more? Or switch out to some other transformer other than Bharat Bijli, like Sislar or something.
Got it.
Which has declared a 1:2 bonus. Which has declared a 1:1 and doing extremely well.
I got your question, Murli, and thank you so much for calling us this morning. Samir, I'll come to you on this one. If you've got coverage on Bharat Bijli, your comments. If not, would you switch to something else?
So we do have view on Bharat Bijli, and we remain positive on the transformer space and the entire power space. We've been telling you for some time that there's a big demand increase expected to come in the power sector as Make in India and manufacturing capacities over a period of time go up. What you're also going to see is more utilization of electronics within the country. So power use in general is only going to keep rising, and companies that cater to that space like Bharat Bijli will also stand to benefit. Valuations for the stock are also relatively, I say, not expensive, but they're fair. So if you are a person who likes to have value on their side, I think this is one of the counters that value is there on your side. So there is some upside potential according to us. We think this is something that one can add on to, at least for your caller. He's bought it at a good price, but the price it's moved up, no doubt, but he can keep adding on if he likes. We think the stock would probably rally all the way to 3,700, 800 in 2 years' time.
Okay, so that's a view with regards to where Bharat Bijli stands. Our next question is from Satyan, who wants a view on Nucleus Software from a longer term perspective. His target is for the next 18 odd months. Samir, I'll again come to you on this one. What's the view like?
Sorry again. I think last week also we asked a question on this one, but we don't have this.
I don't remember. Okay, all right. Then I'll come to Amar then. Amar, in terms of Nucleus Software, what are the charts indicating and what's the target and stop loss that you are currently penciling in?
Yeah, so if I look at Nucleus Software, the stock has corrected by almost 50% from its all-time highs, close to 1,800. Currently, it's around 900 odd level, slightly lower than 900. So the major correction in the stock is over. And what we are seeing is that the intermediate term trend, that is clearly indicating that the stock seems to have formed a bottom. So there could be some buying opportunity here, but the stock needs to sustain above the 1,000, 1,050 mark for any meaningful upside rally. If that is taken out, then the stock could witness a sharp rally towards 1,250, 1,300 levels. Whereas on the downside, the recent low should act as very strong support. That's around 720, 750 zone. So that should act as a very strong zone. So if anyone is looking at accumulating the stock, any correction is a buying opportunity. With a stop loss below 725. On the upside, above 1,050, one can expect some sharp rally in the stock, maybe 15-20% on the upside.
Okay, so that's with regards to where Nucleus Software stands. Our next caller, Dilip, is calling in from Hyderabad. Dilip, a very good morning to you. How can we help you?
Good morning. So currently I'm holding Bravita India, 309 shares at the rate of 1,900. So I'm limited to be on this.
Okay. And okay, all right. Got your query, Dilip. I'll take this up with Samir. Samir, any view on Gravita India? I mean, the numbers were fairly in line with what the street was expecting. Overall, the lead segment was, good for them this particular quarter. What's the view like? Should we continue to hold?
Yeah, I mean, look, they're expanding also in the lead space, and they're also diversifying into various other spaces when it comes to rubber and in the global market. So, the recycling space, according to me, is something that has a huge opportunity of growth. The management has actually been very, very disciplined that they try to ensure that whatever capex they put in generates anywhere between 20 to 25% return on equity. I'm not even talking about return on capital, return on equity. So, how much of the equity goes in. So I think this business has good growth opportunity over the next many years. Their plans come up within a 1-year period. The problem sometimes they face is getting the permissions to set up these plants for the recycling. But I think they will get quicker and faster over a period of time. And what we will see is the growth in top line as well as operating leverage. So we remain positive. Valuations are a little rich, so hold on for you. If you would like to add some more, I would say closer to 1400 would be a good price to add, but I would not sell the stock given the fact that the growth is very strong and the opportunity in this space is very strong.
View on the fundamentals. We've got a couple of questions that are coming through on Tata Motors. One is from BJ Kulkarni, who's got a long-term view, and he's got Tata Motors that he's bought at levels of 655, and the relatively shorter-term view, 3 to 6 months, is from Abhishek. He's bought 10,000 shares at a price of 697 rupees per share, and he's wondering at what level should he consider selling. First, on the fundamentals, Samir, I'll come to you. There are significant developments in the recent past with Tata Motors, and it's been a bit of a yo-yo or pendulum in terms of bad news and good. On the one hand, you had Trump tariffs that came through, JLR exports to the US were stopped, and then you had a resumption of those exports. You now have the UK-US deal that is being talked about and those positive developments. On the India front, you have the UK-India deal. The FTA, which would allow the company to bring in vehicles at a cheaper price. So things now finally moving in favor of JLR. Would you buy? Would you hold?
So we've been a buyer in JLR, Tata Motors for quite some time. We've been saying that the stock has seen a very sharp correction. Apart from the 2 points that you kind of more or less mentioned why we are positive, there's also a demerger coming in where the commercial vehicle business and the passenger vehicle business will be demerged. So that would lead to some amount of value unlocking. Sorry, and like you rightfully said, the opportunity for them to open up a bigger market share or to gain some market share in India opens up because their cars will probably the fully made imported cars, the value will come down, which are very expensive, which means they will become much more competitive. So that's a great benefit. And in the US, with the US-UK trade agreement in place, they again could take maybe some little bit of market share from some of the other companies which are making it in the European Union where the trade agreements are fully not in place, and try to maybe get some market share in the interim. And valuations again are comfortable. I think company is profitable. We believe long-term growth is good, so I would definitely buy onto it.
Absolutely. So thanks so much for that view. I also want to complete the loop, so to speak, because we also got that shorter term question. 697, I think, was the buy price Abhishek had, and he's got 3 to 6 months. Amar, on the charts, would you hold on? It's more or less where the stock price is right now.
So if you look at Tata Motors definitely has witnessed a pullback from the recent lows, and seems to be inching higher, but on the upside, technically, if you ask me, somewhere around 715, 730, that's a zone of resistance for the stock. Yeah, if that level is taken out, then the stock has a potential to rally towards the 750, 760 mark. That's where, again, it would run into a wall of resistance. So I would recommend that if you're looking at it from a short-term perspective, maybe the two levels to watch out for is 720, 725 on the upside. If that is taken out, hold on to your position. It could rally towards 750 levels where you could definitely look at making profits.
Regards to where Tata Motors stand. Our next caller, Suresh, is calling in from Hyderabad. Suresh, a very good morning to you. How can we help you?
Hi, very good morning. I'm holding Nalco in 350 shares here. I'm holding one at 152.
Okay.
So I'm in loss around 5%, 4.5%. But can I add more for shorter term, like 3 to 6 months? And 3 to 6 months, can I add more?
Okay, got your query, Suresh. I'll take this up with Amar. Amar, what are the charts indicating for NALCO? Should we continue to hold for the next 3 to 6 months and also add more?
Yeah, I would say if you look at NALCO again, NALCO has witnessed a sharp correction from 260. Currently, it's around 150 odd levels. So in the metal space, I would say one can look at adding some position, but if you look at the intermediate term trend, that clearly is still weak. So what is likely to mean is that if there is selling pressure in the markets, we could witness the stock retesting its recent low of 135, 137. Ideally, 130, 140 would be a good level to enter, and only a rally above the 160, 165 would mean that the stock is likely to inch higher towards the 180, 185. So these are the levels to watch out for. But overall, if I look at the long-term perspective on the quarterly charts or on the yearly charts, that continues to remain strong and positive. However, in the intermediate term trend, we are seeing some sort of consolidation. So effectively, any pullback is a buying opportunity, and 130, 135 is a very strong support zone.
Okay, so those are the levels that you should keep in mind. 135 on the downside for NALCO. Proves to be a sport. Morpin Lab is the name of the counter that we're talking about next. And Kenrick has got this question. He's bought at levels of 59.5 and he's not really specified his holding period. So I'm going to assume that he can hold for the long term. Samir, any view on the fundamentals?
Sorry again, don't track this one.
Yeah, I don't blame you. You've got quite a wide coverage in any case. Amar, on the technicals, what would you do if you bought Morpin Lab at a price of 59.5?
I would say if we look at the stock on the intermediate term trend, clearly is showing consolidation, and the levels are 42, 43 on the downside and 64, 65 on the upside. So you can say 40 and 65. That's a range for the stock, and the structure of the stock is that the stock has corrected by almost 50% from its recent highs, and the stock definitely has very strong support at the lower level. So ideally, that should not be breached. But for any meaningful rally, it needs to sustain over the 64, 65 levels. So adding at the current levels, I wouldn't recommend, but yes, on any significant correction towards 45, 46 or levels, maybe a 10, 15% correction, there one can look at adding from a long-term perspective. Okay. But we'll have to... Yeah.
Okay, so that's a view on Morpin Lab. We've got a caller, Tarun from Delhi. Hi, Tarun. Good morning. How can we help you today?
Hi, I'm looking at investing in the banking sector. I'm looking at a fund of around 10 lakhs. Okay. So is this the right time to invest in the banking sector?
Okay, that's a good question, and that's quite a considerable sum of capital that you want to deploy. Samir, on the fundamentals, you've already talked about IDFC First. If I remember correctly, it's your top pick. What else would you buy?
So definitely would look to add some HDFC Bank as well. I think the valuations are not too expensive, and I believe given the size that they have, the growth, and I think that there you can make some decent money. I'd look at some. So I would actually look to break that into 4 parts. So, for the safety angle, you can have a HDFC Bank at 25% to 30%. Have IDFC First Bank, and from a PSU side, you can add Bank of Baroda or a Canara Bank interchangeably. There you could put another 25 and 25%. And I would take a little bit of a risk and say go out and buy IndusInd Bank to some extent, maybe 50 to 20%, because I believe the worst is in the price. What we're going to see is tighter controls going forward, profitability coming back, and re-rating in the valuation. So that's the way I would go about breaking in the entire banking space. Yes, we are positive in the banking. We have been for some time. But if this is only, if you only invest in 10 lakhs, don't put all of it into banking. You could probably look at other sectors where growth is also there. But given your specific question, I'll say try to break it up in this format. That's the way I would. Disclaimer, this is how I would do. I have my investments as well.
Yeah. That makes sense. Suzlon, okay, my tongue is not working quickly enough. Suzlon is the name of the counter we're talking about, and B. Soumya is asking this question. She's writing in from Chennai. 70 rupees is the buy price. What's the view on the short-term perspective? Amar, on the charts?
So see, Suzlon seems to be in for consolidation post the sharp rally, and the stock has good support coming around the 45, 46 level. So ideally, one can hold on to the position, but any meaningful rally is only above 60, 62 levels.
Got it. All right, so that's a view on Suzlon. Amar as well as Samir, thanks so much for joining us this morning, and happy Friday to you, and happy weekend.
Thank you. Hope the weekend's not too noisy and painful, Alex.
I hope that is the case as well. And I'm sure everybody tuning in is going to hope the same thing. Well, that brings us to the end of this edition of Ask Profit from Mahim and myself and the team that put this show together. Thank you so much for watching. Do stay tuned. Up next is Know Your Company, and we've got lots more besides that over the course of the day. This is NDTV Profit.
That's huge. That is a biggie. It's out of there.
गोल्ड क्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
I was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया, घर आजा भाई। दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually Dhania vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे बट नहीं हटेंगे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest Hello and welcome. Thanks for tuning in. This is KYC. We're going to today look at Wonderla Holidays. It's an interesting business from a perspective that it all depends, and there's footage playing. It's an interesting business because it's just one of two listed companies in the space, and it's a very niche business to actually be in, and therefore it's a business with strong moats. It also has no debt. And it's a heavy capex business with no debt, and that's the other piece that is very, very interesting about a business like this, with a heavy capex but with no debt in that sense. But yes, that's broadly it with regard to that kind of explains the business model well enough, I think, that video. But let's quickly go across and understand why Wonderla first. Discretionary consumption play. Discretionary is the big theme which is playing out. New park launches that they've lined up, strong growth aspirations that the company has, and limited competition with regard to the players and competition that it has. It's only Imagica World. But in terms of what I want to know about the company, one of the key reasons is that the FY26 guidance continues to be muted on the back of a difficult FY25 that the company has had. So why that on a lower base the company is not able to demonstrate strong growth? So that's the first one. What are their plans with regard to increasing visitors? And they ventured into events, etc., which to kind of boost that number. What are their plans to ensure that that number sustains and keeps growing at a healthy clip? Because that will push underlying growth, and that's the key to Wonderla's business model. All your costs are upfronted, a large part of it is upfronted. Your OPEX too, in that sense, is largely fixed, and therefore the key will be to push visitors into parks. And that's the other piece. Reasons for the weak visitor count in the last 2 years. Will those reasons sustain is something that I'd want to understand. And the fourth one is that they're introducing dynamic pricing. They're also doing better on the non-ticketing side of things, and they're doing well on their hotels business as well. So all of these ancillaries, the non-ticketing, the hotels, is where you want to see how much traction can they build around the park. It's like PVR selling snacks and popcorn over actually pushing viewers to go and watch the movie. And moreover, the non-ticketing revenue is what I want to understand. How does that take shape going forward? What makes the company bullish in the medium to the long term? Why is it that they are so bullish if the visitor count is not increasing, if the footfall is not increasing? And therefore, why do they keep putting up parks if they're not able to garner that traction is really the question I'd want to ask. New geographies that are being considered, because there are a couple of parks that are under consideration. There's also a fifth park that they're planning to launch this calendar year. The sixth piece is margins weakening. Is that a concern? And it is, because this is a strong margin business. Till Q4 last year, it was running at a 30% margin. Q4 this year, it's at 15%. Higher marketing spends, etc. But pulling down the margin, how quickly can it go back? How quickly can it recover? Is it a concern at all? Does the business model change, especially given the fact that they're going into the events business? Return ratios, what to expect? They've been around the mid-teens or maybe slightly lower than that. Can we expect a ramp up with regard to ROC if scale is to be achieved, if the visitor count goes up? And last one, CAPEX. What are the plans with regard to CAPEX? They've done an equity raise. They sit on cash of nearly 400 crore. And therefore, what plans with regard to CAPEX? Anyway, let's start off very, very quickly with first understanding about the company. Wonderla is engaged in the business of amusement parks and resorts, as you've now fully understood. So it's an amusement park, come restaurant, which is food and beverage, come resorts and hotels. So hospitality, come consumer discretionary. That's how one would put it. It's a prominent operator of amusement parks in the country. Completed its IPO in April of 2014, so not new to exchanges. The company has 4 amusement parks currently: Bangalore, Hyderabad, Bhubaneswar and Kochi. Those are the 4 parks that they have. The company has purchased land in Chennai for a new park, and the new park will start functioning by year-end calendar year 2025. They've also done a fundraise to ensure that there's enough money in the pipeline to continue to launch new parks, and they're expecting maybe a park or 2 to be launched over the next 2 years as well. Of course, approvals for that underway. So we'll keep an eye out on that as well. Makeover of existing parks is also what they regularly do, adding new rides to try and make sure that visitors coming in get a more diverse experience and are attracted to come back again. Not just for the same rides, but there are more rides and more diversity in that sense for visitors to try and enjoy. But that's the sum and substance of it. In terms of non-ticketing revenue, those are your your levers to kind of push non-ticketing revenue, and this will become important when we look at the operational metrics and when I give you a breakup of how the revenue split is happening in terms of ticketing versus non-ticketing and how the growth of those are happening. So keep this in mind. This is broadly how the non-ticketing services revenue is shaped up. We'll speak to Arun K. Chitilapalli, who's the chairman and managing director at Wonderla Holidays, to get a perspective on all of that we've just spoken about. But it's time to go across and look at our KYC metrics. What will we be looking at? And we'll start off by understanding the operational metrics, which is how have footfalls, which is how is visit count in the parks evolving. We'll look at income statement, balance sheet, operational metrics, and cash flow. Thereafter, we'll look at shareholding pattern, return ratios, street cred, and street coverage. We'll look at all of those. And along with street coverage, we'll also delve a little bit into valuations, because that also holds some importance where investors are concerned. So something to look out for. But let's quickly start off with the income statement. And within that income statement, we're seeing good growth with regard to top line. So your top line has shaped up fairly well over the last few years. It's delivered a 50+% CAGR on the top line number over the last 3 years CAGR I'm talking about. Margins have come off significantly over the last 3 years, so that's a bit of a concern. But just the top line growth ensures that you've done fairly well for yourself overall. Margins have gone from 17 all the way up to 50%, thereafter cooling off to 47, and FY25 has been 32. Q4 FY25 has in fact seen margins tumble and take a bit of a knock. So let's pull out the Q4 numbers in particular of FY24 versus FY25. And what we are seeing as part of that is margins have shrunk from 35.5% to just about 20%. So very sharp contraction in margins, and it'll be interesting to understand whether they can recover. There are various reasons given for this margin contraction, and I'll quickly touch upon those before we go on. The first reason is that discretionary spend in Q4 FY25 was muted. So these are some risks to the business as well, and it kind of covers the Q4 numbers. Second one is you've seen a larger focus on marketing spend and employee costs going up. Marketing spend also has increased because they've gone into the events business. They've held a couple of events at their parks to increase footfall. All good measures, mind you, but all of those hurting margins. So are they temporary? Are they permanent? Is this a permanent change with regard to how Wonderla operates? Will be a question. And organizing an event inevitably increases the recurring expenditure that the company incurs, because otherwise the park is functional as is. But if you have to hold an event, then you have various other expenses to take care of, including the performers, etc. And that kind of dilutes margins to a certain extent from what the management has suggested in the Q4 con call. So the increased expenses is what is hurting that margin number. But nonetheless, EBITDA has grown in a very nice and healthy fashion. Look at the absolute EBITDA, it's gone up 91% over the last 3 years. Even when I'm looking at the EBITDA number absolute between FY22 and FY25, as you can see on your screen, it's gone up. If you can switch over to the FY25, correct. So if you look at the number, 22 to 147 is very, very healthy. But the journey there is difficult, because FY23, the EBITDA was 213 crore, and FY24 it was 230 crore. So actually there's been a shrink with regard to EBITDA when you're looking at each of the years, and that is where some of the concern lies. And we'll try and quiz management as to what to expect going forward on this count as well. So that's how the income statement stacks up. Some concern, no doubt, but the direction with regard to top line growth is absolutely solid, and it's right. Even in terms of profitability, the direction is the right direction in which they've gone in terms of profit after tax. So fairly decent in that sense. Again, it's cooled off versus FY23 and FY24, but nonetheless, the profit direction seems just about right. Let's look at the balance sheet therefore. Now, when you're looking at the balance sheet, you look at the equity capital, it's gone up from around 1,100 crore to 1,700 crore in the last year or so. That's because one, they had an equity raise of around 500 odd crore, and then you obviously add the profit after tax for FY25 full year, and that's how you've added the 600 crore to the 1100 crore number and arrived at the 1700 crore in terms of net worth at this point. Borrowing is close to zero. This is a very low to no debt company, which is impressive because they do a lot of capex. But when you're looking at the cash and bank balance, it's sitting on a 400 crore cash balance. No surprise. Why? Because they've done an equity raise in FY25, and that aids the cash balances. Those cash balances are not fully deployed yet, and therefore how do they deploy that cash balance and how quickly do they do that will be a question. Now, very important to note here, for a 4,000 crore market cap company to have a cash balance of 400 crore is significant, and therefore that's the other piece you want to be careful about as to what they do with that cash balance. But for the moment, that's how the financial metrics look. No concern with how the balance sheet has been going about itself. There's absolutely no concern there. Let's look at operational metrics now. Now, in terms of operational metrics, again, it's crucial to understand footfalls. Now, what's happening with footfalls is that they are falling. Footfalls have actually fallen 10% FY23 versus FY24 and FY25. So from 3,311 crore come down to 3,050 crore in terms of footfall. I apologize. Footfall from 33 lakhs has come down to 30.5 lakhs. That's how the footfall has come down by. Now, in terms of park-wise footfall, that's the distribution. The park in Bhubaneswar will start to incrementally add to the footfall because this is a park which was launched in FY25. So it's starting to see an expansion in footfall even in Q4, and very sharp growth that we are seeing there. So FY26 will be the year, first full year of the Bhubaneswar park becoming operational. So you want to see as to how that park does in terms of footfall and where it goes and how it contributes to the overall footfall of the company. But this clearly is a point which is lacking. Let's look at revenue per user. And when you're seeing it 2023 versus 2024 versus 2025, revenue per user has not gone up significantly. It's gone up by just about 16-17%. And therefore your ARPU, which was at 1,250 rupees per user, has gone up to 1,450 rupees per user. No significant increase. Let's take a breakup of this as well. The breakup of this is on ticketing versus non-ticketing. And in terms of the breakup, again, very interesting metrics. The ticketing numbers haven't gone up substantially. It's the non-ticketing numbers which are showing the best growth. This is average ticketing revenue and it's location wise. If you see it, hardly a 2-3-4% growth, not more than that. But when you're looking at non-ticketing, let's look at those numbers with regard to non-ticketing, and the average has seen a growth of at least 15% and therefore a large chunk of the revenue coming from non-ticketing, and that piece is doing very, very well for itself. So non-ticketing is the big focus. Let me now quickly take you through cash flows. Interesting here because cash flows actually come off FY23 versus 24 versus 25 along expected lines, and we'll give this a thumbs down because cash flows have come off, but they're in line with profitability. So that's a positive. No receivables, no working capital requirements, none of that. The net cash flow is close to zero because a lot of the cash flow goes into investing activities and investing in new parks. Now let's look at return ratios. Return ratios have been steady in that sense over the last couple of years, around 15%. Can they maintain that will be the question, but clearly not the best place to be with regard to where return ratios are. Now, return ratios technically are a neutral, largely because it's a mid-teens kind of return ratio and there's no debt. So it's largely equity, and therefore your return ratios don't look as weak for a high capex company. They're doing fairly well for themselves. If they're able to do well on the top line count, then you might well see these return ratios turn around and do very, very well. And therefore, we'll want to understand whether there's a target IRR or whether there's a target return ratio. But we'll give this one a neutral with regard to where return ratios is concerned. Let's look at shareholding very, very quickly, because we're running out of time as well. So in terms of shareholding and in terms of promoter holding, it's around 62% currently. That dilution that you see is purely because of the equity raise that's happened. FIs are showing a better interest in the company. As part of the fundraise, we've had Custody Bank of Japan, which has put in money and now owns around a 2% stake here. There's also Value Quest India, which owned this one, but now owns it maybe through another emerging markets fund. There are DIs, Tata Mutual Fund, SBI Magnum, which own around 9% of the company, so something to look out for. Some good investors within that FI, DI bracket as well. But the public shareholding has gone up substantially. So from FY20, which was at 27,000, the public holding has gone to 58,000. Something to be careful about. Number of shareholders have gone up substantially. That's how it's shaping up on the shareholding count. We'll give this one a thumbs up, no doubt about that. Let's look, therefore, at street cred now. In terms of street cred, stocks done nothing over the last year or so, and those numbers will flash on your screen. Stocks done nothing over the last year or so. But the last 5 years, it's done quite well for itself. It's not done badly at all. It's been a 5-bagger in the last 5 years. So not bad returns in the medium term. But outside of that, in the last 1 year, it's been a bit of a problem. And that's also because the operational numbers and footfalls aren't coming through. So you want to wait and watch as to how that evolves. Last off, I want to cover valuations and street coverage. In terms of valuations, when you're looking at it, Wonderla versus Imagica. Imagica trading at a premium. FY25, trailing 12 months, surely at a premium. But even FY26 at nearly a 15% premium to Wonderla. So in that sense, it's not a very expensive stock in relative terms. But at 35 times, you want better growth, right? So something to look out for again is growth. Whether it can clock that growth and re-rate sharply in terms of its price to earnings will be a question. That's how the analyst recommendations have shaped up. There's an 83% upside to what the average analyst expectation is. So again, we'll give this one a neutral because of how all of those metrics are playing out. Let's go across to Mr. Arun K. Chittilapalli, who is joining us. He's the chairman and managing director at Wonderla Holidays. Welcome, sir. So I want to start off with trying to understand how the environment is. And you've guided for a 5 to 10% footfall growth. You've not done that in the last couple of years. One, what makes you confident of that growth? And two, wouldn't you want something better in terms of that growth number? Because Bhubaneswar adds to that number, right? So just trying to get that perspective.
Thank you for having me on the show. Yes, we have guided. I mean, we are hoping that there will be, it's not a guidance, we're hoping that there will be a 5 to 10% growth in footfall in this coming year. The reason for that is we have, like you said, we have opened new parks. We have opened one park, which is a small one. And we are also opening a large park in December in Chennai, which should be at par with one of our largest parks, like in Bangalore, etc. So these two factors will play. The other thing is, like you rightly said, we've not seen footfall growth in the last 2 years. The main reason for that is we had a huge growth in surge in footfalls in FY23. Now, on growing on top of that is difficult because our parks are already mature parks, most of them, with the exception of Hyderabad. So we are not expecting growth in footfalls there. And what usually happens when we have extraordinary growth in footfalls is our reviews become negative, and then people, don't come. And then, of course, there is issues with weather and all those things, which also kind of played into the footfall growth for the last 2 years. Now, the reason why we are expecting growth in this year is because those effects have kind of normalized. I think 2 years is a good time for any those kind of effects to normalize. And we are also adding new attractions to our parks at regular intervals. So there is more reasons for people to visit. And we have extra capacity that we have added over the years. So these three reasons why we are expecting growth in this year.
So Arun, just give us better perspective on this. Is 5 to 10% a conservative number? Can we see a better number with regard to footfalls this year? That's my first question. Second question is, how does that impact your top line? Because there's ticketing revenue, non-ticketing revenue. Non-ticketing revenue is growing, ticketing revenue is not. So give us that interplay and give us that perspective as to where revenue should therefore lie and what's the aspiration there.
See, I think 5 to 10% is a conservative number from our end, because it's very difficult for us to predict how footfalls are going to grow. The environment is uncertain. Now we have a India-Pakistan situation. There's so many things happening, right? So, and we don't know, how the things will play out. But if all goes well, I think we should minimum do 5 to 10%, and we could do better as well. If, for example, if we are seeing huge demand in Chennai, for example, which is our newest park we're going to open. If you see huge demand there in our first quarter, then of course the numbers will be better than that. But we are not predicting that because we are being cautious about it. So let's see how it goes.
And what about top line, Arun? Dynamic pricing, no increase in ticketing revenue per user over the last maybe couple of years. Does all that also call for an increase on that count, and non-ticketing revenue also growing decently well on an average, on an ARPU basis? So how should that evolve in terms of top line?
The top line again is hard to predict. We do have dynamic pricing in our ticketing and also for the resort and everything. So it all depends on demand and supply. So if there is high demand, then obviously we will ramp up our ticket prices. And consequently, if there is low demand, we will obviously bring down prices, and there will be more discounts, etc. So it's very difficult to kind of again pinpoint on how the revenue growth will be. But we are expecting an ARPU growth of roughly again 5% for this year. Again, because we are adding new parks, and new parks usually mean higher discounts in our first year or so. So because of that, I don't see ARPU growth much. Also, ARPU has grown tremendously in the last 3 years. If you look at our pre-COVID ARPU and post-COVID ARPU, we are almost double in that sense. So I don't see much growth there. We might expect 5% or 5 to 6% for the year.
Yeah, but all of that should add to your top line, Arun. So maybe a 15 to 20% growth on top line from what you're saying could well be reasonable.
Could be reasonable. We'll have to wait and see.
Okay, understood. And what's the medium-term guidance? Say, if I were to pull out and think of it from a 3-year perspective, what's the 3-year CAGR with regard to top line, and how would that evolve? Just give us a number broadly.
See, we don't give guidance in terms of revenues. That's not allowed, and we don't do that. But we are expecting footfalls to grow substantially not much in this financial year, but definitely in the next financial year, which is FY27, when we'll have Bhubaneswar also running at full capacity, fully firing, and also Chennai will also be firing by FY27. This year is a bit of a wild card. We are expecting some footfall growth, but again, we are unsure of how it's going to be at this point.
Sure. Arun, sorry, I'm just going to try and squeeze 2 quick questions. One is with regard to margins. So your margins have shrunk. Where do you see them on a normalized basis? Maybe a year or 2 more of drag, and thereafter they normalize. Where do they normalize?
Yes, we will see some margin pressure in this year again because of our new parks. We spend more on marketing. We are recruiting a lot of people. We are doing ESOPs. So obviously there are cost pressures on that front. But once, like I said, in FY27, once our footfalls start coming from our new projects, I think margins will start coming back.
And therefore, around 30%, would that be a reasonable number? Coming back in the sense, just wanting a ballpark number, even a range would help.
See, last year we had, I think, our highest ever margins. So, that is at a stage where we have fully matured parks, very low depreciation, and each park giving high ARPU growth. Now, that for us to get to that stage, it will take maybe a year or two, because we are having new parks coming on stream. So there will be high depreciation charges. There will be marketing costs, which will be higher than usual. So, for our margin to come to that 50% kind of EBITDA margin, maybe it will take a few more years. But I think our margins will improve from what it is in the last year, maybe this year or next year. That's what we are hoping.
Interesting. Okay. Thank you so much, Arun. In fact, unfortunately, all the time we have very interesting conversation. And I could go on, but that's all the time we have. So I'm going to have to let you go.
Thank you.
But yes, so let's quickly look at the KYC rating on this one. And, we've tried our best to analyze this the best we can. And from what commentary that's come through, it may be a year or two more before that ARPU number actually picks up. Because there'll be discounts which will keep coming through because of new parks. And it'll also take a year or two, if we can go on to the next slide as well. It'll also take a year or two for the footfalls to pick up. And both of those could well start impacting numbers FY27 onwards. That's the expectation he's given. And he said that margins thereafter will take maybe a year or so to pick up and go back towards 50%. That'll be very interesting to see. So more to see in terms of execution. It's going to be a weak year for FY26. That's the outlook he's given us. Completely out of time on this edition of KYC. Hope you found this helpful. Stay tuned. More action on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो डिलिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया, घर आजा भाई। दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually a Daniya vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hi, thanks so much for joining in. You're watching Markets at 12. Let me take you through the latest data that has come through from the Association of Mutual Funds in India. This essentially tabulates the inflows and the outflows from the mutual fund industry in the month of in the month of April. And it's an interesting talking point, because before you get into the overall number, I want to talk about the fact that ETFs, other ETFs as a category, have seen massive inflows. The interpretation is that investors that are looking for maneuverability have bought exchange-traded funds. And here it's important to understand why that is. We've seen quite a bit of uncertainty and variability in prices in the recent past, a lot of volatility. And so investors are looking to get a specific buy or sell price. And so when they're looking to buy at a certain level, they will deploy in ETFs because they get a specific price. Of course, if you buy an index fund or any other mutual fund for that matter, you will get the closing price of that day, the close of day net asset value, so to speak. But 19,000 plus crore rupees coming through in the form of other ETFs in the month of April, and that compares with a sizable inflow of close to 11,000 crore rupees in the previous month. So if you cumulate the index fund inflow in the month gone by, that is about 1,500 crore rupees, and 19,000 plus crore rupees in the form of other ETFs, then equity ETFs and equity index funds have got upwards of 20,000 crore rupees of inflows on a net basis, and that's quite considerable considering that active mutual funds have gotten an inflow of about 24,000 crore rupees. Now, we'll talk more about that in just a bit. Let's listen into what the management of Asian Paints has to say about their results.
My first question to you is that it's been a tough year and a tough quarter overall for Asian Paints. You know, there are a couple of factors playing their role: muted demand, there's down trading, there's high competition playing out. Just wanted a sense as to, you know, how do you read all this, and when do you think that things will start to improve going ahead in FY26?
So overall, the quarter has been tough. The demand conditions has been fairly weak in terms of what we have seen overall to that extent. And that has kind of led to possibly the 2% volume growth, what we have kind of achieved in this quarter as we see it. Overall, what we see is that the urban centers continue to be on a lower growth trajectory. The T3, T4 cities, the rural centers are doing relatively much better in terms of what we see. The overall decorative industry is definitely facing larger challenges, and we kind of anticipate that the entire paint industry would be negative as far as the decorative paints is concerned. The industrial paints is something which has been doing quite well overall. They have been in the range of anywhere between 6 to 10% in terms of the growth which we have been able to see from a point of view of the industrial sector to that extent. And the other sector which has done well is the B2B institutions led market, which is there to that extent, where possibly the growth rates have been definitely much better in terms of from an overall scheme point of view to that extent. So I think that kept in mind today, I think the larger challenges comes in from the decorative sector in terms of the overall paints in terms of what we're looking. Going forward, we are definitely seeing some upswing in the month of April in terms of looking at going ahead. Obviously, I think we'll have to keep on watching out for all the geopolitical stuff which is happening in the environment in terms of what is going to be there, and see in terms of how does that pan out. But overall, the estimation is that the demand conditions would be definitely much better than what the year we have seen. The urban centers should also kind of come up. The rural demand should kind of go up on the prediction of the normal monsoon in terms of what we kind of really see ahead to that extent. The luxury to mid-level housing, I think, is another area where we see that there should be a strong growth in terms of what we will get. Government spending on infrastructure would be a strong imperative area in terms of what we will continue to see this year to that extent. And finally, the industrial paints in terms of auto, powder, protective paints should kind of do well. I think given all this imperative, we see that we should be clearly aiming for a single-digit volume value growth for the coming year to that extent as we go forward.
Got it. And since you were talking about the overall industrial segment doing well for you, just wanted to understand that overall profitability, operating profitability has slightly been impacted there, and this is due to higher investments in the sales network as well. What's the sense there, and what's the kind of scope of improvement that you're expecting in the next financial year?
So see, we always have been operating, under a certain guidance in terms of what we have given the market. We have always maintained a PBDIT margin guidance of about 18 to 20%. If you look at the FY25 over on a console basis, we are closer to that 18% PBDIT margin. In fact, the standalone businesses are much better than that in terms of what we see in terms of the overall margins which have come in. So while I think the margins have come under a little bit of a pressure going forward, I think the way the organization is looking at the cost imperatives, the way we are looking at possibly our backward initiatives in terms of what we are doing to that extent, I think we are still kind of maintaining the guidance of about 18 to 20% in terms of PBDIT margins, which we should be able to kind of retain as we go forward.
And because crude is also improving, Mr. Singhal, just wanted to understand as to what role will that play in improving your margins?
So overall, if you look at the last quarter, which is Q4, there has been a deflation of about 1.5% in terms of what we have seen. So I think it is up the gross margins overall from a point of view of one level, which is coming into that extent. As we go forward, crude is kind of reached a certain level, which we think possibly is stabilizing at. But there seems to be still a lot of volatility in terms of the overall environment with respect to the currency. Rupee dollar has been behaving very differently in the last about 2 months in terms of what we see. We also see that possibly there could be another round of tariff war which could kind of come in, which could redefine the raw material prices a little bit far more differently in terms of what can be there in the environment. Given all this, what we see is that while deflation will definitely help us in terms of improving the margins forward, but anything which is fluctuating currency or in terms of additional tariffs which will come will have to be washed out in terms of how they really impact the overall margins, and therefore what would be the pricing considerations we would have to make as we kind of go forward.
Got it. And in terms of the one-off that was there as an exceptional item in your consolidated statement, that was related to White Teak, and it was approximately 183 crores. Give us some sense there, because I think there was an impairment that you've recorded there. Just wanted to get a sense as to why that has happened. And is that just for this particular quarter, or going ahead also it is going to have some ripple effect?
So see, White Teak has been part of our overall acquisition in terms of what we have made as part of the overall home decor segment, which we have kind of entered very strongly. As part of that, we had acquired White Teak about 3 years back. 2 years we have done extremely well from a point of view of exponential growth in terms of what we have been able to achieve. We have driven the sales from almost about 45 odd crores to something like close to about 120 crores in 2 years to that extent. Last year particularly, which is FY25, has not been very, very strong. In fact, we got into some loop of the BIS standards to that extent, given the fact that a lot of material comes from China there to that extent. And that is something which has disrupted the last 6 months trajectory, where possibly the sales have been down by almost about 50% in terms of what we have seen. And given the fact that we have done the projections and there are certain payouts for the business which is involved to that extent, we had to kind of take a impairment from a point of view of goodwill in terms of what we had to maintain in terms of the overall business going forward. So I think we see that this as a one-time event which is happening, given the fact that the external environment has been very, very difficult to that extent, which is there. But going forward, I think we should be able to kind of really bring it back on ground to that extent and not look at any further impairments going forward.
And in terms of capex also, correct me if I'm wrong here, around 700 to 800 crore is something that you've planned over FY26 and 27. Give us a sense as to how that will be deployed and what it will be exactly deployed for and how exactly it will be funded.
So overall, the funding is not a problem because the cash reserves of the organization are enough to kind of really look at that funding which kind of comes in. We are looking at this 700 to 800, which will kind of go in terms of looking at part funding some of our backward integration areas which is there, and part possibly looking at bringing cost efficiencies and areas of efficient manufacturing in our plants as we kind of really see it. To the extent there could be some additional expenses from a point of view of putting additional distribution centers and so on and so forth, which would kind of come in. Going forward, we are looking at also a 9th plant, which is going to come in, where the investment would be more than 2,000 crores, which will come. And therefore, for the next 5 years, we are looking at almost an investment of anywhere between close to about 3,000 to 4,000 crores, which will happen.
Interesting. 3,000 to 4,000 odd crores. All right. Just one last question before I let you go, Mr. Singhal. In terms of competition, you know, this has been a pressing question since the past few quarters. Do you now think that the competition is having a bigger impact? Is that correct? And it's not just from the new entrants. Is it also from existing players?
Yes, I think the competitive intensity has gone up. If you look at from the existing players as well as the new players overall to that extent, and that is something which is bound to happen when the demand conditions are on a little bit of a lower side to that extent. And I think that is something which we are also reinforcing our areas of action in the market in a very, very strong way in terms of what we want to get. But I think with respect to newer competition, even if today, you know, you're talking of a share of 3 to 5%, I don't think so. It is a very big share to really impact the overall dynamics of the market. What we need to kind of see is whether some of these actions are sustainable over the next 2-3 years in terms of what is there. Yes, immediately there has been disruption to some extent from a point of view of how prices and margins kind of stand in the market to that extent. But I think the whole area of sustainability is something which has to be seen, given that some of the new competition might have a share between 3 to 5% in terms of what they're getting.
All right, so that's the management of Asian Paints talking about the quarter gone by, which was a tough quarter, considering that there is increased pressure on pricing and margins have been under pressure. The stock is more or less flat in trade right now. Let's talk about the AMFI numbers, though, and the numbers coming through for the mutual fund industry. There is a new record high for gross SIP inflows, and that number is coming in at 26,632 crore rupees. That compares with about 25,930 crore rupees in the previous month, and it is higher than the previous record of about 26,459 crore rupees that was recorded in December of 2024. This is a very significant statement of intent by Indian investors, and a large part of that is driven by retail flows. Bear that in mind. Overall, the actively managed equity mutual fund schemes have seen net inflows of about 24,000 crore rupees in the month gone by, and that compares with about 25,000 crore rupees in the previous month. It's more or less stayed stable. If you look at the components of that, you have flexi-cap funds that have gotten a considerable inflow of about 5,540 crore rupees. You have small-cap actively managed funds that have gotten about 4,000 crore rupees on a net basis. Mid-cap funds have bought about 3,313 or 14 crore rupees or thereabouts on a net basis. So it's across the board inflows that have come through. But as I was saying at the start, you have the star of the show this time around in the month of April, that is in the form of other ETFs. That category includes all equity ETFs, remember, and that includes like the Nifty 50 ETF by State Bank of India, mutual fund, SBI mutual fund, or UTI MF that have very large Nifty 50 ETFs, and everything from a momentum strategy to a value strategy, everything is included in this bucket. That has gotten inflows of over 19,000 crore rupees in the previous month, in the month of April, and that is nearly double what they got in the month of March, which itself was a very high number of close to 11,000 crore rupees. So people are using ETFs to buy the dip and any dip that comes through. What else is a headline? Another headline is gold ETFs, which have once again seen an outflow, very small one, of about 5.8 crore rupees in the month of April. And this indicates that people are booking profits at higher levels. Remember, gold prices have been on a tear. So that's more or less what the AMFI numbers are about. But let's take you through more earnings conversations, and my colleague Tamanna caught up with Biocon's Chief Executive Officer and Managing Director Siddharth Mittal to speak about the quarter gone by and the way ahead. Listen in.
Welcome on Earnings Edge. We're speaking about Biocon this morning. Key highlights of the results for Q4. Profit has beaten estimate. Revenue growth has been led by biosimilars and generics. Exceptional gains have also aided net profits. All in all, the quarter seems fairly robust with a margin expansion as well from 23.4% to 24.4%, a beat definitely on what was expected by analysts. Joining us to speak more about the quarter gone by and of course the outlook for this financial year is Siddharth Mittal, CEO and MD at Biocon Limited. Mr. Mittal, thank you so much for joining us. Just take us through how you have seen the numbers this quarter.
So good morning, and I think definitely it's been a very, very robust quarter, which was led by all three verticals, the growth of 15% on a year-on-year basis. So generics grew by 46%, biosimilars on a like-to-like basis, which is excluding the impact of the sale of the branded India business and also the licensing income, if you exclude from last year, fourth quarter numbers, has been a very robust 9% growth. And research services grew by 11%. So, when you look at some of the growth drivers in each of the businesses, see generics, we had a couple of very important launches. We had launched liraglutide in the UK market earlier in the quarter. Then we launched lenalidomide tablets as well as dasatinib in the US. And I think that led to a significant growth. And in biosimilars, we continue to expand our biosimilars in emerging markets. We continue to expand the market share of our launch products in the US, which led to the growth.
Let's talk a bit about all of the segments, Mr. Mittal, and let me start with Biocon Biologics. Is the new launch the focus as a tailwind for revenue growth going ahead, even further than EBITDA growth perhaps?
Well, revenues would, of course, continue to grow. There are tailwinds in areas such as insulin. We see a huge demand for insulin in various parts of the world. And we, of course, continue to see a very strong traction of our drugs which are launched in the US as well as other emerging markets. So we continue to see that momentum build up. But of course, the growth, incremental growth is going to come from new launches. And we have many new launches coming up in the next fiscal, whether it's in the US or other parts of the world.
In terms of revenue growth for biosimilars, do you see pricing pressure to play a part going forward? Because, of course, that's your biggest segmental revenue.
Pricing pressure is part of the game. I mean, you do continue to see price erosion. The question always is, do you see deeper price erosion than what you expect, or do you see normalized price erosion? And I think as of now, we have not seen any signs of anything deeper than what we already selling at, and we see market stabilization. Now that, of course, cannot be predicted. A lot of the price erosion is dependent on how many new players enter the market and what is their action, or the other incumbents, what steps they take to gain more market share, and what defense then we have to do. So, but at this stage, we don't see any drastic change in the pricing environment.
Okay. Do you think that some of the concerns around what's happening in the US in terms of tariffs is easing, because we're yet to hear the last word on pharma tariffs from President Trump in the US, and now recent moves to encourage the FDA for approvals, faster approvals, manufacturing in the US. How do you see that picture, Mr. Mittal?
I think we are also watching as the world is watching. Of course, we feel that there is a huge dependency on Indian generics and biosimilar companies to lower the healthcare cost and support the healthcare security of the US. And I think any tariff would, of course, go against that spirit. And today, if you look at the 40 to 50% of the volumes in the US and comes from India, and or generics itself contribute to 60 to 70% of the overall volume. And the value is only 20%. So putting any tariffs would be counterproductive. We, of course, will have to wait and watch what kind of tariffs are being levied. But, in short term, we could see some disruption. But at the end of it, if you look at most generic companies and the margins that they're getting from the US business, I mean, there's very limited room for the companies to absorb the impact of tariffs. So somewhere we expect that the price would end up being absorbed by the patients or the consumers or the payers in the US.
In terms of the India, so since we're talking about geopolitical impact for your business, and that's one big factor, we already spoke about the US impact. I just want to understand what the India-UK FTA means for you, and how do you see that going forward?
I think it's, of course, a very encouraging step. 3 years of negotiation led to the settlement, and I think that's I would say, a very important milestone. Now, from an industry perspective, specifically when I talk about pharma, I think we've not seen anything detrimental. We definitely see a lot of encouragement between the two countries to work on newer technologies and strengthen ties further than what we have. So I definitely think it'll be positive for Indian companies to work with the UK companies to further expand and provide market access to the patients in the UK.
Let's talk a bit about the generics business. Robust growth in Q4 of 46%. Is this sustainable? Were there one-time factors, giving rise to this? Just give us a sense there.
So there was definitely an impact of launch of generic lenalidomide during the quarter, which bolstered the revenues during fourth quarter. I'll remind you that we had a settlement with the innovator and for launch of a certain volume in before the unlimited launch, which is in January 26. So January 26 is when you'll see everyone capture the entire market. But till then, each company had negotiated a certain market share, and we have supplied a large part of what we had negotiated with the innovator in fourth quarter. So yes, it will normalize in the coming quarters, but when I look at it on a full year basis, in FY26 we have very important launches coming up. We recently launched liraglutide in UK, so we'll see a full year impact of liraglutide in the UK market. We are also gearing up for launching liraglutide in Europe, which will lead to the growth in first half of the next fiscal. And then we are expecting approval from the US FDA for both liraglutide as well as for Copaxone. Now, apart from these important big blockbuster opportunities of Copaxone and liraglutide, we have many other OSDs also, which will be launched in the US. And I think a combination of growth in generic formulations and in our API business, we definitely expect a good growth in the generic segment on a full year basis in FY26.
Can you give us a broad number to what that growth looks like, if you're comfortable with that?
Sure. I would say that it's more in high teens or to 20%, high teens to 20% kind of growth level is what we can definitely deliver.
And on a consolidated margins basis, you think this 24% range is sustainable, or do you see this as an up move? Because you're talking about a lot of blockbuster drug launches, expansion of liraglutide baked into the next financial year, or this financial year actually.
Yeah, I think it should be sustainable. I definitely don't see a significant expansion. We do look at launching new drugs, which will increase the margin, but the existing base business also gets impacted by the normalized price discounts that you have to pass on to your customers. So net, I don't see a significant change. Of course, it could be a bit lumpy during the quarters. I mean, fourth quarter was definitely high on account of the generic lenalidomide launch. But when you look at full year FY25 numbers, those kind of numbers should be sustainable in FY26 as well.
Yeah, just a couple of questions. You've raised funds, 4,500 crores. What is the deployment plan there?
We have announced that we are going to raise 4,500 crores in one or two more tranches. And mainly this is to take care of the obligations that Biocon has towards Biocon Biologics acquisition of Viatris, where we had taken in certain structured debt or structured equity from few of the investors. So this is to take care of those obligations.
Okay. Just one word on a possible Biocon Biologics IPO. Is that still being penciled in? Is that being deferred, looking at how the markets are right now?
Well, the markets, of course, are not at its best time. So the option continues, but we are also evaluating what are the other options we can pursue if it's not IPO. And I think we just constituted a committee of the board to look at all the options, and including a possible merger of Biocon and Biocon Biologics.
Okay, so that's pretty much out there. Thank you so much, Siddharth Mittal, for speaking with us. CEO and MD of Biocon Limited. It's been a robust Q4, but the outlook for the financial year also seems pretty optimistic, with new launches being the cornerstone.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
Friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this whole meat idea.
Actually, मैं बताया नहीं, मैंने शराब पी के इसको बोला था कि ये करना है।
So you have the conversation in his office. He doesn't take it too seriously.
इसको मैंने बुलाया, घर आजा भाई। दोपहर को आया अपने महंगे वीसी वाले कपड़े पहन के। दरवाजे पे घंटी बजी, वो भैया ने इसको सोन पापड़ी के डब्बे में मटन पकड़ा दिया। इसके महंगे कपड़ों पे थोड़ा वो छलक गया। तो
Was it tough initially to get people to buy into the story?
I come from actually a Dania vegetarian family, and my parents, my dad said, मैं मतलब लोगों को क्या बोलूँगा?
The best thing is if a friendship survives a business pitch, I think that should be a true test of friendship.
हमने एक दूसरे को ये लिख के वादा किया था,
अगर बीवियाँ भी लड़ लें तो हम झगड़ा नहीं कर सकते।
मर जाएंगे पटनी घाटे।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
इजी मेंटेनेंस है।
आपको मालूम है इसका फेस वॉश का खर्चा डबल है। तो देख मेरी आंखों के नीचे पहली बार तेरे को डार्क सर्कल है। एक मरे हुए मुर्गे में अगर जान डाल सकते हैं ना तो लिशियस बने।
The friendship came first or the idea came first?
Abhay, he was my friend. We also had.
Was.
Okay, this time. Actually, he landed in my office with this.
Watching NDTV Profit, I'm Mahima Vachharjani. Pidilite is in focus on the back of its Q4 earnings, and we are joined by Sudhanshu Watts, Managing Director of Pidilite Industries, joining us now. Sudhanshu, always a pleasure speaking with you. Just wanted to understand as to how Q4 has panned out. Overall numbers, what the street was expecting was a slight miss there, but there has been a good and healthy volume growth, which has led to the kind of growth that we've seen. EBITDA was also a slight miss in terms of higher marketing spends, if I'm reading that correctly. directly. Your sense as to how the quarter has gone by and overall, how has FY25 fared?
So thanks, Mahima. Always a pleasure talking to you. And I think quarter four and both FY25 and quarter four have been very satisfactory. I must say Pidilite has delivered good set of results under the current circumstances. I think our double-digit underlying volume growth, about 9.8%, we are steadfastly delivering on the promise of profitable double-digit underlying volume growth. Our EBITDA in this quarter has again come 20% plus. Mahima, we've always been, guiding that we will deliver our EBITDA in the corridor of 20 to 24%. This corridor applies from year to year, but it indeed applies from quarter to quarter as well. Because as you know, Pidilite does not have consistent 4 quarters. We see reasonable amount of seasonality. Quarter one tends to be a large quarter for us. Quarter three is also is a large quarter. Quarter four usually tends to be a smaller quarter. And therefore, the EBITDA margins, with some of the fixed costs remaining the same, tend to vary a little bit from quarter to quarter. And I think as far as the year is concerned, we've delivered an expansion of 100 bps plus on our EBITDA margin.